vaccination process. So we'll have plenty more, of course, on that. I'm looking at Bitcoin rebounding above $33,000, the dollar and the euro pretty much steady, Tom.
Very good. On the data front, just green on the screen. We're watching GameStop. We'll have much more on that with John and Lisa here in a bit. But GameStop up here, and just as one of the story stocks of the day. I would note the dollar can't get a bid. That's all there is to it. It is real stasis here. As Francine mentioned, euro 121.59 and yen 103.81 as well. We begin to pick up the pieces after an historic inauguration. We have a Democrat on later today. But first, Brian Stile will join us in Wisconsin. The Republican, as his party considers its future. Again, futures up 13, Dow futures up 7, the VIX 22.41. Stay with us. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance, good morning, everyone. Francine Lacroix in London, I'm Tom Keene in New York. We really, on this day, after all of the inauguration, begin our political coverage forward for President Biden and for our legislative branch. Brian Stile joins us now, first out of the block, with the fascinating 1st District of Wisconsin. This is Les Aspin's old district, and then on to Paul Ryan, who Congressman Stile worked for, and he now holds court. From Janesville in the very far west of the district over to the lake, and of course over to Kenosha as well. Brian, it is such an interesting district, and really is the polarity of America from Janesville to Kenosha. How are you going to straddle that polarity forward?
Southeast Wisconsin is a great place to live and work. It's about hardworking families getting the job done. What we need to do is actually address the policies that are impacting people in Wisconsin or across the country. We got to work to get people back to work, to keep America healthy, to defeat COVID, and to keep our communities and our country safe. If we're focused in on the policies that matter to workers and families in Southeast Wisconsin, those are the values that matter to everyone across the United States. We're going to be able to come together to move the ball forward on behalf of the American people.
Ron Klain, working for President Biden, made clear he needs bipartisan to succeed. How can you break bread with President Biden? How can you break bread with Speaker Pelosi?
I think there's areas where we can come together. We can come together to ultimately defeat this virus, making sure that we have the resources on the front lines for our nurses and our doctors, vaccine development and vaccine rollout. We can come together, I think, on infrastructure. But at the same time, that means Congress has to get to work, where we've seen on day one Joe Biden making pretty extreme executive decisions that I think are against the interests of the American people. We're going to have to push back against that. But I think we can come together to work on some of the most pressing issues, in particular, getting workers back to work.
Can you get behind a $1.9 trillion package for COVID relief?
What we've seen is a lot of money going in and providing liquidity into the market. What we need to do now is begin to target that relief to those individuals who've been impacted through no fault of their own. These broad brushstrokes of relief, I think, have a risk of overheating and putting us further into debt, and in particular, not being good stewards of taxpayer dollars. I'd like to see us target that relief to those people who've been negatively impacted. Think about people working maybe in the service industry, your cooks or your frontline folks. That's where we need to target the relief rather than these broad brushstrokes, which are just not a good use of taxpayer dollars in some instances.
So if that's where the money goes, would you be behind the 1.9 trillion? I mean, if you look at the liquidity in the markets that was provided by the central bank, this COVID relief package would do something else.
I think what we would be seeing is some of this is not good use of taxpayer dollars in the initial proposal. We're going to have to see what's actually written on paper. Some of these top-line numbers are being floated around on Capitol Hill. What I'd like to see is us narrowly tailor this to those people that have been impacted rather than these big, broad brushstrokes where they're going to try to implement all sorts of policy objectives unrelated to COVID or unrelated to getting folks back to work.
Okay, I-94, moving north up the lake. It's part of your headache as well. If we have stimulus, then, Congressman, we're going to have a bridge to nowhere infrastructure project. How do you envision infrastructure as a conservative guy?
One easy opportunity there is let's push forward with private sector infrastructure investment. This is where I was so frustrated by Joe Biden's decision on day one to kill the Keystone Pipeline. That was billions of dollars of private sector infrastructure investment, thousands of jobs, hundreds of those jobs from Southeast Wisconsin. Those are the types of jobs that we should be able to rally around. Private infrastructure investment would be critical, and I was disappointed to see Joe Biden kill the Keystone Pipeline on day one of his administration.
Okay, fine, but where looking forward is the common ground on infrastructure? I have aged watching essentially nothing get done in Washington. How do Republicans provide bipartisan leadership to get to a second stimulus bill that builds bridges, fixes airports, etc.?
I think the big conversation is, what is the pay for? How are we actually going to come together? The side of the ledger of we need to build infrastructure, I think that is a broad, bipartisan analysis. I think the conversation, the adult conversation in the room is going to be, how are we going to pay for this? Is it a look towards raising everyone's taxes, or are we going to find areas where we can provide efficiency and cut spending elsewhere? Can we use user fees? That's the adult conversation we have to have in the room. I think there is consensus on the side of the ledger of we need to invest in infrastructure. I'd like to see a conversation about how we can be thoughtful, productive stewards of taxpayer dollars, but also moving forward with that infrastructure investment.
Congressman, I've got to ask, and I know you're crushed. We were frankly looking for your entourage to cancel you today. The Green Bay Packers kicked a field goal? Congressman, help me here. Paul Ryan never would have let that happen.
Bad decision. You got to go for the touchdown when you have one of the best red zone offenses in the league with 2 minutes left. That's a decision that's going to haunt us until next season for sure.
I mean, this is the Democrats' fault, isn't it?
We got somebody to blame for that. That's a bad. That's a bad decision.
Francine, that was football talk. Francine, save us.
I know, Congressman. I know you condemned the mob that insurged on Capitol Hill on January 6th, but you also voted against impeaching Donald Trump. Does Donald Trump still have a place in the Republican Party?
I think we need to hold the criminals that came into the Capitol accountable. We always need to hold people accountable for their actions. I'm a big tent Republican. I think there's plenty of room for lots of folks about how we're going to move the ball forward. I don't think impeaching the president is productive. I voted against it. I think the Senate should pass it aside and get on with the work of the American people. The American people want to get folks back to work. They want to get America healthy. We need to keep our communities safe. Let's put partisan politics aside and get on with the work of the American people.
Right, but so where do you see Donald Trump fitting in the Republican Party?
I think he's a terrific voice about cutting taxes, about lowering the regulatory burdens. I think he should be a continuing voice to advance us on good, solid conservative policies going forward. The bigger the tent, we need more people on the Republican side, more people in the conservative movement to move our country forward, not less.
You've got some demographic challenges there. We'll come back to you, Congressman, next time Green Bay explains what the hell happened there. That was absolutely extraordinary. He is from the 1st District of Wisconsin, as far away from Green Bay as you can get this morning. Congressman Style, thank you so much. Right now, with our first word news in New York, here's Karina Mitchell.
Tom, good morning to you again. There are signals that President Biden faces challenges in enacting his proposed $1.9 trillion coronavirus relief package. Both Republicans and Democrats, in a call with White House economic advisor Brian Deese, asked for justification of the size of the proposal. One Republican senator, Susan Collins, says she'll see if the bipartisan group on the call can come up with their own plan. Meanwhile, Boris Johnson and Joe Biden struck different tones on the prospect of a trade deal between the two countries. The British Prime Minister was the first European leader to receive a phone call since the inauguration. The UK statement on the call says the two discussed the benefits of a potential free trade agreement, but the US statement didn't mention trade. A new deal with the US is a top priority for Johnson. And China has now overtaken the U.S. as the largest recipient of foreign direct investment. A United Nations trade agency says that global investment flows plunged 42% last year because of the coronavirus pandemic. The U.S. and Europe lost ground while China gained. And in Russia, the Kremlin downplayed nationwide protests demanding the release of jailed opposition leader Alexei Navalny. Western governments protested the detention of thousands of demonstrators. Tens of thousands of protesters battled riot police in freezing temperatures. They had been warned they could face charges of mass disorder for taking part. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg. Francine.
Karina, thank you so much. Look at that. Karina actually wearing a Chelsea blue. Tom, it's quite important to speak about this headline just crossing the Bloomberg terminal by AP saying that the Chelsea Football Club is firing its manager, Frank Lampard. Now, I don't often speak about football, Tom, so bear with me. If I speak about football, it's because it's quite a big deal. We understand that, of course, this is a move by the owner of Chelsea Football Club. He is one Roman Abramovich. It's his 10th manager that he shows the door to after, of course, Chelsea has not been performing as probably Roman Abramovich was expecting. We understand through sources, so this is not confirmed, that Roman Abramovich may be talking to the ex-Paris Saint-Germain boss, Thomas Tuchel, about replacing Frank Lampard.
My
Look
word,
at that.
You're going to have to be sitting with me.
I know about Chelsea. Italian
about
football
this.
and Chelsea.
I think Ted Lasso is available, frankly, over at Richmond. I think he would look pretty good there. I should point out, folks, that Mr. Lampard, I believe, was outstanding in the midfield as a player. He's not just a coach, Francine, but he's a huge deal as a former player. We will somehow, I think, have a little more on this here in a bit. I think I just had, Francine, a Pharaoh sighting in the building. They keep us apart, but even with the virus.
Wearing Chelsea blue.
No, but it was a Pharaoh sighting, I believe, was had. It's easy because Pharaoh's entourage is like 25 people, so, you can't miss him when he comes in. The Chelsea.
Half the size of yours, Tom.
No, mine is 2 dogs. Lampard there in Chelsea, blue, and of course with West Ham earlier as well, out at Chelsea. We'll do much more on that through the morning. That's a big deal. Francine?
Yeah, they did win yesterday, beating Luton in the FA Cup fourth round.
That
now,
doesn't
coming
count.
up next,
Come
Joshua
on.
Sharfstein, Johns Hopkins Bloomberg School of Public Health, Weinstein. We'll talk about vaccinations, and we'll talk about UK variant. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Bloomberg Surveillance, Tom and Francine from London and New York. Tom, we spoke to Sam Fazeli about vaccinations, the path forward, and as we continue to track the virus, Bloomberg, of course, has developed this unique partnership with the leading authority on COVID-19. We've been with Johns Hopkins, and they've been at the forefront of the international response. Every day, we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Joshua Sharfstein, Johns Hopkins Bloomberg School of Public Health, Weinstein. Dr. Sharfstein, thank you for joining us. How much more do we need to do, especially in the U.S., to get vaccinations going?
Well, we need to do it in two dimensions. We have still in many places the need for mass vaccination sites, the importance of setting up efficient places that people can go and thousands of doses can be delivered every day. And we also really need to build the muscle of outreach and really finding people in communities who need vaccination, who might not get in a big line to go to a mass vaccine site, might not have internet access to sign up, but are really in harm's way from the virus. And we really do see signs of that right now. And we certainly, for the first time, are really seeing national leadership in getting that set up.
Joshua, are we just too impatient on this? Is this the way every virus rolls out?
Well, expectation management is very challenging. I recall back for H1N1 when some people were saying we'll get vaccine at the beginning of October and it wound up at the end of October. And those were 4 very long weeks as people were saying, where's the vaccine? You know, you said the beginning of October. Had the word been, you know, we'll see it by December, people have been really excited that it came early. So I think part of the challenge here was that the prior administration was promising quite a lot very quickly, and we didn't get anywhere near that amount, and that has really set up kind of this expectations challenge right now.
But Joshua, what's the holdup? Do we have enough doses, or is it something else? Are we distributing this just like the flu vaccine, except with a cold chain?
I think there are two issues. One is there seems not to be a great deal of understanding of how much is getting made and where it's going. And hopefully that will resolve as the new administration works with the manufacturers to get more of a rhythm going. But the second issue is there aren't enough doses for everybody who not only wants one, but for everyone in the risk groups that have been told they're eligible. And so that's created, it's going to create a shortage situation until the supply really eases. And there's look, when there's not enough, you can move them around, but there's still going to be a lot of people who want the vaccine, feel like they, are eligible for the vaccine because they are, but can't get it. And we're stuck in this situation for probably at least a matter of weeks, maybe a few months.
Okay, just seconds ago, Merck actually saying it's shutting down its COVID vaccine program after they had some lackluster data. So they failed to generate immune responses, Dr. Sharfstein, comparable to a natural infection or existing vaccines. So that program has now been shut down. What's the UK model is basically vaccinating as many people as you can with the first dose in the hope of some kind of protection. What does the science behind that tell us?
Well, the best science is based on the clinical studies that show this tremendous 95% effectiveness with 2 doses. That's really what the science shows. Everything else is a presumption. People are looking at the antibodies levels, they're looking at other things, and they're hoping that if you just give 1 dose, you'll get some protection, and maybe that's a different kind of strategy. I think we have to balance the need to jump out and try to do everything we can in this instant with the long-term confidence we need to build a vaccine program that can end the pandemic. And my concern with saying, well, we know the science is 95%, but let's try this other thing, is that could undermine the long-term, well, we are using science here to defeat the virus.
Thank you so much, Joshua Sharfstein there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg for the latest information. You can also tune in every day for our exclusive conversation with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up as part of Bloomberg's The Year Ahead Summit, the Pfizer Chief Executive, Albert Bourla. That's tomorrow at 8 a.m. in New York, 1 p.m. in London. He'll be in conversation with our Editor-in-Chief, John Micklethwaite. They'll talk about vaccinations, rollout, and possibly the next pandemic. This is Bloomberg.
sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Karina Mitchell with the Bloomberg Business Flash. Royal Philips says it expects growth to remain resilient in 2021. The Dutch company has been bolstered by acquisitions and a record haul of contracts to upgrade hospital equipment. The coronavirus pandemic is driving a long-term shift toward virtual care that should boost demand for equipment that lets doctors look after patients remotely. Over to Hong Kong, equity traders can't get enough of Tencent Holdings. The $950 billion giant is on pace for its biggest monthly gain. Traders are buying thousands of January call options that expired Thursday. They're also unloading their bearish puts. Tencent rallied 11% today. And say it ain't so, about 40% of people in London would consider leaving for another European country. That's according to a survey taken last fall by recruiter Adecco and YouGov. The findings underscore concerns that Brexit and the pandemic may make London less attractive to workers mobile enough to leave. And that is the Bloomberg Business Flash. Francine.
Corinne, thank you so much. Now, caught in the crossfire, HSBC Chief Executive Noel Quinn will face UK lawmakers this week. The bank is facing scrutiny over its move to freeze the accounts of Hong Kong activists. Well, let's get more on this with our Jonathan Tice, who's been covering the banks from the very beginning. He's from Bloomberg Intelligence. Jonathan, thank you for joining us. What do we actually know about what HSBC's thinking is right now?
Good morning. Well, we're going to find out a lot more about the thinking because at 4Q earnings in February, they're going to give us an update on their restructuring for growth strategy. And central to that will be what the plan is with China, Asia, Hong Kong, which is where all the growth is. So unfortunately, even after Trump, the issues that HSBC, its profit base in Hong Kong, its desire to grow in China, which will only get greater, I think, after this presentation, they really do find themselves between a rock and a hard place. And this is just another example of a sort of left field bit of headline risk that their current sort of political football positioning puts them in.
So what do they do next, Jonathan? I guess, you know, how much of a reputation risk is it? How many people will leave HSBC if they're seen as too close to China?
Well, I mean, domestically in Hong Kong, I think it is something of a risk, but it's not a new risk. When you say what will they do next, I think if you step back, the only thing that you can really think is the only way to shake this issue is to restructure dramatically. Asia is where the growth is. If you look at consensus in 2022-23, 90% of group profit and 75% of revenues are expected to come. No, more like 60% of revenues. So why have they still got such a big US presence? Why have they got such a big UK presence? Why have they got 2/3 regulators looking at them? It doesn't make sense. So, I mean, to my mind, the only way February and say, right, we really want to make, which I think they will, because that's where the growth is, they do have to completely and utterly change the group dual listing to some of the US assets and radically change. Otherwise, we're going to be having this conversation over and over again. Problem.
Thank you so much, Jonathan Tice. They're looking at HSBC, and of course, one of the big questions is, you know, does a bank that is or has become so politicized, what exactly is its future, both in Asia but also in Europe? Now, just moments ago, we heard from Merck that they were stopping their vaccine program because of failed tests, or they didn't receive the immune response that they were hoping. So we'll have plenty more, of course, on vaccine, on the rollout, on when some countries are doing so much better than others. This is what the markets are telling us right now. Now, I know a lot of the focus is on technology stocks. It was great to have our Alex Webb talking about that. Tencent earlier on was gaining some 10%, for example, in the Chinese markets. Markets seem to be starting the week in the green. Tech shares climbing. Investors also focusing on the U.S. administration's $1.9 trillion COVID-19 relief plan. If you look at Europe, equity benchmarks in France, Spain, and the UK are a little bit lower, but overall the feeling is that they're looking at the R number, trying to figure out whether we're just inches away from a double-dip recession or not. I'm also looking at crude oil in New York, climbing towards $53 a barrel. Bitcoin rebounding above $33,000 $1,000, and the dollar and the euro pretty much steady. Now, after ending the last week on a rocky note, it's very clear that global stocks resuming their march upwards, pretty much confident that lawmakers, Democratic lawmakers, will be able to push forward their sweeping stimulus package in the face of Republican pressures. And then we talk about, of course, whether it's a bubble, given what we're seeing in terms of lockdowns, and whether the valuations are really there to stay. Now, more Bloomberg surveillance next, simulcast on radio and TV. This is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
Wartime situation, and a situation like this, you do whatever it takes.
We're still living through a very disinflationary COVID shock.
Once the vaccine has been rolled out in a meaningful way, then we really will start to see some very positive growth.
Banks are doing what they need to do, which is to revive an economy.
Markets have been conditioned to expect ample and predictable support from central banks.
The public still has money in reserve, but the money is not circulating in the economy because people do not want to spend.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This
It's Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro with equity futures positive 9 points on the S&P 500. Tom, it feels so good to be back. Can I do the introduction again? It just feels great.
Oh, please.
Good morning, good morning.
No, start over. Do the good morning, good morning.
You want me to do that again?
Do it one more
you want
time.
a double dose
radio.
of good morning, good morning.
TV and radio. Do it.
Good morning, with equity futures positive 9 on the S&P 500. We're up 0.2%. Tom, I've missed you. Tom, I really have, I promise. Just a little bit. Is he crying? Lisa, is he still with us? Is he emotional?
I think that you pressed the mute button. Tom, you're still, you rendered speechless. What is this?
It's not that I'm speechless, and good morning on radio and TV as well. It's an incredibly busy week here. John and I, Lisa, are in shock that we are not in Davos. I mean, I was at the piano bar last night, and it's just not the same as in Davos. We got a Fed meeting, we got the real yield coming back, and, you know, the market's lifting and all the rest of it, and then they throw on top. We'll get to football in a moment in Chelsea, but topping all of that is the return of Ferro.
Thank you, Tom. I appreciate that. For Joe Biden, though, I don't think he's worried about my return. I think he's worried about something else, and maybe that's where we should start. The president, a reality check down in Washington, D.C., Tom, and a reality check almost immediately on his fiscal stimulus plans. Bipartisan. Good luck with that.
Yeah, good luck with that. I thought there's some important notes out of this, and then the conversation of the Sunday talk shows, thanks to Face the Nation, Bloomberg Radio. But, you know, John, it's as expected, and it's this 50-50 thing in the Senate. Plus today, scheduled the House will move impeachment papers over to that trial in the Senate.
Unity, what unity down in Washington, D.C.?
Unity.
Lisa,
there's not even unity here.
There's unity here for the best part of like 2 minutes, Tom. It'll break down in about a second.
We're doing pretty well so far.
Just be patient. The breakdown of unity, the division will return to this program almost immediately. Lisa, we have to talk about the breakdown in Europe. Europe versus the United States, Europe versus the UK as well. And that picture for the Europeans is getting uglier, not better.
I was struck by a report out of Element Capital in the Financial Times. This is one of the biggest macro hedge funds, where they basically were saying people are underestimating how much Europe is diverging from the U.S. This has to do with vaccination schedules. That's why I'm watching at 8:15 a.m. the National Institute for Allergies and Infectious Disease Director Anthony Fauci speaking at the World Economic Forum. It is not in Davos, but we are still monitoring all of the speeches that are going to be remote. Really key to see how close we are to getting herd immunity. A lot of uncertainty around that, and Europe seems to be doing a much worse job. 11 a.m., the UN is releasing the World Economic Situation and Prospects 2021 report. One thing that I'm watching for, Oxfam put out a report where they basically said that the world's wealthiest individuals recouped all of their COVID losses in 9 months. They expect it to take more than 10 years for the world's poorest residents to recoup what they have lost during this pandemic. That division really being highlighted by Ray Dalio and others for a big concern for everybody going forward. And at 3:45 p.m., President Biden is speaking on American manufacturing and is planning to sign an executive order going back to what you were talking about, John, about the stimulus plans that they have, how much they will be able to push through and how much they can go beyond just plugging the productivity gap and getting to some actual stimulus. Are we there yet? Not sure. Still kind of plugging the gap, John.
Lisa, I want to build on something you were talking about just at the beginning there, the breakdown of what has been happening in Europe. And Tom, Wolfgang Munchau of Euro Intelligence, absolutely scathing about the mistake the Europeans have made. And I'll read you some of it. The EU prioritized the price. They paid 24% less for the Pfizer vaccine than the US. For the Oxford AstraZeneca vaccine, the price gap is 45%. Tom, so what? You got a good price over in Europe. Ultimately, what you needed was the vaccine, and right now, they haven't got enough of it.
Well, they haven't got enough of it. It's the way they're doing it, and each state, each city is and nation, frankly, is different. But John, what I find fascinating is there's clearly been some successful models. West Virginia getting a splash, I believe it was in the New York Times this weekend. Why can't every other state be West Virginia? That's got to be the #1 question this morning.
Well, hopefully we can build on that as the months progress. Certainly the United States, in absolute terms, on its own in isolation, of course we need to do better. But in relative terms, compared to Europe right now, the US, the UK looking better than good. Tom, I want to turn to the price action just quickly to start off the week. Huge week of tech earnings, huge couple of weeks of tech earnings coming up for you. Futures this morning, we're positive about 7 on the S&P, call it 6, up 0.2%. In the bond market, full speed ahead to a Fed meeting a little bit later this week. Yields come in about a basis point to 1.0754%. And I just wondered, Tom, for euro dollar, 121.54, when this growth differential story starts to reassert itself in a more dominant way for this currency pair.
Well, yeah, you gotta wonder from 122 down to 121, and the belief that it will give way. And it's John. It's the third week of January. You were on sabbatical for I think 6 weeks. I mean, time is moving slowly. It just feels long. The way that we missed you and the stretching out here at the end of the year with President
6 minutes in.
Trump and all that. I mean, it's emotional. I mean, it's so emotional, John, with you returning. We have a conversation from the president of China, important at the Davos agenda, as Klaus Schwab talk. Very quickly here, John, to see President Xi speaking different than when he was in the Valley.
President Xi saying he remains convinced that winter cannot stop the arrival of spring. Tom, there is a huge PR effort underway from the Chinese Communist Party, and once again, they're using the World Economic Forum to achieve their goals. We have to remember how this began, Tom. We have to remember how little transparency that we actually got at the start of this pandemic. In fact, through this pandemic, still not enough transparency as to what happened in China more than 12 months ago.
Absolutely, no question about it. Well, just because of time, John, let's get to our esteemed guest here with the earnings coming out this week.
David Leibovitz joining us now, JP Morgan Asset Management Global Market Strategist. David, let's just start with the earnings. Do they matter?
So I think that the earnings will matter, but arguably what will matter more is what companies tell us about what they're expecting for 2021. If we think back about 2020, guidance kind of disappeared right off the bat as COVID took hold around the world. And what I think you're looking for in this earnings season is a little bit of clarity from managements in terms of their expectations for the coming year, particularly in those more economically sensitive sectors. Tech demand looks like it's going to remain relatively robust, particularly given some of the challenges to rolling out the vaccines, therefore supporting the trade that worked pretty well last year. I think the questions that I have are more about the industrial names, the material names, the financial names, what's in store for 2021 in these more cyclical parts of the market.
David, you work in the institutional area. What is the significance of the SPAC surge? What is the significance of the GameStop moonshot?
So it's particularly interesting. I think that the SPAC trend is one that certainly has caught a lot of folks by surprise. I think you're really seeing two things go on here. One, there is clearly a ton of liquidity that continues to slosh around in the markets. And when rates are effectively at zero, that liquidity needs a home. Now, for quite some time, we've talked about some of the challenges to returns in public markets going forward. SPACs are a really interesting way for public market investors to access what would traditionally be private opportunities. And I think that that's a big part of the reason why you've seen so much enthusiasm and interest in that over the past couple of months. In terms of some of the other market dynamics, it's very clear that there is a large retail presence in the market right now, and it does appear that that has increased pretty substantially over the past couple of years. You can kind of get at it from a number of different angles, but whether you're looking at brokerage trading accounts, whether you're looking at the Robinhood data, whether you're looking at some of the Fed data, it does appear that the retail investors' role in the markets is growing, and I think that that's causing some of this what I would deem to be wonky price action on a day-to-day basis.
David, this is the most polite you've ever potentially even imagined somebody saying what you're saying, which is basically retail investors maybe are going nuts. You can ignore them and just keep doing your thing and it won't really matter. I mean, is that basically what you're saying? People are saying that the GameStop trade up doesn't make any sense from a business standpoint. You have a lot of bubblicious type of behavior. You've got the word bubble all over a lot of reports. Where do you stand on this? Do you see bubbles?
So I think that there are pockets of froth. I think one thing that's important to recognize is that when everybody's calling for bubbles, I mean, arguably that means that there's enough awareness that perhaps, these bubbles are not as significant as what a lot of people may believe. That said, you look at the price of, some cryptocurrencies, certain parts of the equity market, there's clearly a bit of froth. And I think what gives me the most pause as I look ahead over the next couple of months is, the narrative just keeps getting pushed out, right? So there have been challenges with vaccine distribution. That means that the economy is going to come back online later this year than we thought back in, say, November. But equity prices are higher and credit spreads are tighter. And so the setup feels a little bit precipitous at the current juncture. And I wouldn't be surprised to see a bout of volatility here in the next couple of weeks. But generally, I think that the fundamental story remains intact, one of an economy that comes back online over the course of this year and into 2022 and that economic rebound, importantly supporting corporate profits, right, which is what determines the direction of the equity market over longer periods of time.
And that right there is the prime example of sitting on the fence by David Leibovitz. That's how you do it. Right there. David, that was beautiful. There's pockets of froth. We might see a little bit of a pullback, but stay invested. Come on, David. It's got to be more intense than that, more concentrated in some parts of this market. We're talking about crazy stories, aren't we? With some of these names that are just huge short coverings. Are retail really in the driving seat for big parts of this market at the moment, David?
So I think it's really, when you think about the institutional money, it tends to be relatively sticky. When I think about, what drives volatility, it's more those investors that are perhaps trading and investing based on what they're seeing in the headlines. And so, I'm not saying that there's no risk in this market, and I do think that where valuations are and, kind of given the uninterrupted run that we've had over the past couple of months, again, some volatility here, some consolidation here would be perfectly appropriate and probably pretty healthy for the trend in the market over longer periods of time. But, counterbalancing everything I just said, John, is what's happening in the monetary policy arena. And, as long as central bankers around the world remain accommodative, as long as fiscal policymakers continue to leave the taps open, I think we saw it in spades last year. It's really tough to fight the liquidity trade, even if, certain things aren't making sense at any given point in time.
Squeezed in the healthy pullback line there too, David. Loving it. Great to catch up. David Leibovitz of JP Morgan Asset Management. Thank you. Much more still to come with Tom Keene, Lisa Abramowitz, and myself, Jonathan Ferro. For our audience worldwide, I've got to say, Tom, beautiful morning in New York City. It is cold, but it is good to look at.
It's gorgeous. It's the gorgeosity. We're all together.
Futures up 9.
I'm playing Apex Legend on the break.
This is Bloomberg.
Support GameStop.
With the First Word News, I'm Karina Mitchell. President Biden is hearing it from Republicans and Democrats. Lawmakers say he needs to justify the $1.9 trillion price tag of his COVID-19 relief plan. 16 Senate Democrats and Republicans spoke on a call with White House economic advisor Brian Deese. Moderate Republican Senator Susan Collins says she'll press the bipartisan group to come up with a narrower plan. Meanwhile, another milestone for the U.S. in the year-long fight against the pandemic. Total infections have now exceeded 25 million, the world's highest total. That's roughly 8% of the population. The death toll has now topped 417,000. In Mexico, President Andrés Manuel López Obrador has tested positive for the coronavirus. The leader that Mexicans refer to as AMLO is 67 and says his symptoms are mild. López Obrador has generally held a lax approach to the virus. He's refused to impose mandatory lockdowns and usually doesn't wear a mask. And China has now overtaken the U.S. as the largest recipient of foreign direct investment. A United Nations trade agency says global investment flows plunged 42% last year. Because of the virus, the U.S. and Europe lost ground while China gained. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. Much more to come. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
China continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong, but it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
A lot of America is hurting. The virus is surging. We're 400,000 dead, expected to reach well over 600,000. Families are going hungry. People are at risk of being evicted. Job losses are mounting again. We need to act. No matter how you look at it, we need to act. If we act now, our economy will be stronger in both the short and long run.
The President of the United States there, Joe Biden, for our audience worldwide from New York City, live on Bloomberg TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. 7:18 Eastern Time. Here's the price actions. We count you down to the opening bell. Equity futures with just a little bit of a lift, up about 11 on the S&P. We advance a third of 1%. In foreign exchange, euro dollar 121.60. Muted price action there, coming in about a tenth of 1%. Similar story in the bond market too. Big event taking place Wednesday, Fed decision, special coverage with Tom Keene and Caroline Hyde a little bit later this week. Looking forward to that. Yields in a single basis point to 1.0754%. Tom, just quickly, a word on financial conditions. And I know a little bit later in the program, Lisa will want to talk about this, but AMC out raising another $900 million. Here's a company that hasn't really had any business now for the best part of 12 months. And it looks like they get through this. It looks like they've raised enough capital.
In the shorter block, we can say this for another time, but John, you're absolutely right. The distortions in the markets, all centering on the new incentives and disincentives set up by the Fed, absolutely remarkable. If anything, it seems almost snowballing from 2020.
Couldn't agree more.
No other way to put it. I mean, we'll do that red and green on the screen right now. NASDAQ with a nice lift. Emily Wilkins is not focused on the distortions in the market. She's focused on the distortions at the legislative branch. Greg Valliere this morning writing that the Senate is a mess. Emily Wilkins, within the mess is the pageantry of impeachment. They will walk today, I believe, across the rotunda to the Senate, and they will hand over the impeachment. What happens next?
Well, for the first couple weeks, nothing much. They're going to delay the actual start of the impeachment trial until February 9th. And then on February 8th, they're going to have everyone sort of give their opening comments. This is going to give time for Trump to get his legal team together, something he's been working on previously.
Okay, great. But, the Washington Post leads today with a constitutionality debate of this impeachment. Can this be delayed substantially because somebody has a right to say, is this constitutional?
I mean, that doesn't sound like it's going to be delayed much past February 8th, February 9th. That's when things are going to get rolling. And to be honest, I mean, Republicans wanted that so Trump could be prepared. They also kind of want that to cool down tensions. Democrats want that because they know they've got other work they need to do. They need to start passing cabinet positions for Biden. Biden wants that as well. So everyone's kind of agreed here on the 2-week delay. Exactly how the debate goes about whether or not this is constitutional, I think we'll see that continue to play out as the trial actually begins.
Emily, how original is it to have a jury that are also the witnesses?
In an impeachment trial, that's how it works. I mean, particularly for this one, it's just the nature of how it goes. It is pretty rare to sort of have something where you had these senators who were in the building, whose lives were at risk, who were threatened by this mob, to now come out and try and say whether or not Trump incited that mob or not.
Well, Emily, you talked about the other business at hand, and for the Democrats, they were hoping to get something through or some agreement on fiscal stimulus ahead of that February 8th beginning of the impeachment trial. How realistic is that?
So over the weekend, the White House had a meeting with a group of 16 bipartisan senators, 8 Democrats, 8 Republicans, to try and figure out what might be the path forward on Biden's proposed $1.9 trillion stimulus package. And what they heard back from senators is, look, we just passed this $900 billion package in December. You guys need to provide us the data of why it's $1.9 trillion. Why do we need this amount of money and for this number of things? So negotiations have started, they're up, they're ongoing, and this is something that we're probably going to hear more from in recent weeks. A February 8th deadline, that's pretty close. Remember, it took Congress quite a while to get an agreement on that $900 billion package we saw in December. But there definitely is momentum. The Biden administration has promised that they will continue to push lawmakers on this.
Emily, E.J. Dionne, writing in the Washington Post today, talks about the president's urgency. What is Biden's greatest urgency right now?
It's the COVID-19. That has been his number one focus. It was his focus on the campaign trail after this broke. It's one of the things that he's discussed. And look, a number of that, it's not just Congress, it's also the executive orders that he's signed, the initiatives that he's working on, trying to make sure that we are maintaining the whole 1 million vaccines per day for his first 100 days, getting testing sites up and started, working with corporations. And so there's a lot, I think, that's happening behind the scenes as the Biden administration tries to take what was a state-by-state approach under the Trump administration and work to federalize it.
Let's just finish on this, Emily, and we could talk about stimulus all day, but allow me just to turn to China just for a moment. The leader of the Chinese Communist Party, Xi, is speaking right now, urging the avoidance of meddling in other countries' affairs, and simultaneously at the same time, almost in the same sentence, saying we should enhance political trust via strategic communication. What's the approach here from this administration as they look towards a country that this country has just accused of genocide? And then they have the leader of that country going to the World Economic Forum, speaking to no longer Davos, Switzerland, but the elites worldwide, and telling them not to interrupt politically, but let's build political trust.
Well, President Biden sees China differently than Vice President Biden did 4 years ago. They realize that China, they have a much more aggressive stance toward the nation, toward their treatment of the Uyghurs, toward their treatment of intellectual property theft. So we're going to be expecting the Biden administration to sort of continue what we saw with the Trump administration, being stern with China, sort of having a strong hand. That said, Biden is hoping to really engage more of their foreign allies to make sure that they are standing up to China, not just the U.S., but the U.S. and other nations together.
And looking to Germany too, specifically. Emily, great to catch up. Emily Wilkins there, Bloomberg's very own, down in Washington, D.C. Tom, that's the politics. Do you want to find a little bit of room for sport?
Well,
just
we got
a
to
little
find.
bit.
Oh, come on,
just
stop.
A little bit.
Luke Kawa just tweeted
What
out
did he
he's
say?
crushed. He's a Man U fan, and he's crushed that Lampard is leaving Chelsea. John Farrell, who is Mr. Lampard?
Fantastic midfielder for Chelsea, much more so than England. His Chelsea career was absolutely phenomenal. Brilliant goal scorer coming in from deep, pushing forward, Tom.
Yeah.
Fantastic to watch. And he's been sacked as the manager of Chelsea, a West London football club, after spending another couple of £100 million through the summer, Tom, and clearly not getting the benefits, the rewards that the owner of this football club, Roman Abramovich, wants to see. And Abramovich has got a history of not having much patience with his managers, Tom.
Yeah, I mean, it's real simple. I mean, I saw it a couple of days ago. Tomori was given out to AC Milan. I mean, they're flat on their back. And when you give someone like Tomori out to AC Milan,
AC
you know
Milan's
it's
top
over.
of the league.
Guys,
come on.
Guys, you can talk about this all you want, but we also are on the brink of a Super Bowl. So if we're going to be talking about football, we do have to talk about about
Lisa,
American
answer
football.
This question of the morning. Why does everyone hate Giselle's husband? What is that about?
Because
what did
they're
Giselle's
jealous
husband
of
do to
him.
anyone?
He has
because of
this
Giselle?
perfect life. I mean, that's the sort of perception. And now he's going to his 10th Super Bowl. He's bringing the Tampa Bay Buccaneers down to actually be the first team in NFL history to play their Super Bowl in their home field. He's like charmed. I mean, come on. He's good looking. He's married to a supermodel.
Oh, really?
But I'm going to leave it there.
Hold on. I got to get this out. Riley, I'm working on it.
He's good looking.
Okay.
He gets to go home to Giselle.
Okay, Riley, can you get on that? Let's go, team. Pick it up. Pick it up. Pick it up on that.
New York.
Please.
This is Bloomberg.
Please, come on. Where's the band?
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City, this is Bloomberg Surveillance live on Bloomberg TV and radio. Just processing the breaking news of the last 10 minutes or so, Tom Keene. Tom Brady's good looking.
Oh, no.
Do you like that?
Oh, no,
The breaking news of the last 10 minutes. Lisa wanted to weigh in on sport.
Oh.
Yeah. And the one line she gives us.
No, you guys put me on the
Tom
spot.
Brady is good looking.
You can't do that, John.
Do you want to add to it, Lisa?
Well,
You've got a couple of seconds.
We're talking about how they are going to the Super Bowl because you guys were talking about football, soccer. When we actually have a Super Bowl, we've got the teams in. Carry on. Do a market check,
Tom
John.
Brady is good looking.
I'm all riled up.
I love that. Much more on Lisa on sport through the morning. Looking forward to that right here on Bloomberg. It's the price action. Futures positive about 1/10% on the S&P 500. We advanced a little more than 1/10%. The outperformance last week, it came from big tech, and we add some weight to that, up 0.9% on the Nasdaq 100. Switch up the board into the bond market we go as we approach the Federal Reserve decision a little bit later this week. Here's the scene for you on 10s, 30s, 2s as well. Unchanged curve, just a little bit flatter. We come down 2 basis points on a 30-year to 183, on a 10-year 1.0737%. I think we all get the message from the Fed right now. Rates aren't going up for a long, long time. It's the taper story that Chairman Powell's got some work to do with this market. Does he push back just a little bit harder? As for financial conditions, it is unbelievable to see a company that's basically been shut for about 12 months, hardly done any business at all, carry on raising money. Carry on raising money. I'm talking about AMC Entertainment. And this was the objective of the Federal Reserve, to divorce financial conditions from economic fundamentals. And AMC is a perfect example of just that, raising another $900 million and taking bankruptcy, at least in the immediate term, off the table. Let's finish on this. Foreign exchange, euro dollar. Much more on this a little bit later in the program. The vaccine rollout in Europe, let's be honest, clear, brutal. It has just been terrible. Euro dollar right now, 121.55, coming at 1/10%. That's the macro story. Remain Bostic. As the week grows older going into next week, the big story is big tech and earnings season.
Yeah, big tech and earnings season. We're going to start off here with Merck here. Of course, news just crossing the wire a little bit earlier about them suspending those COVID trials. Basically, they were already kind of an also-ran in this race for vaccines and for treatments. It shouldn't have a huge material impact on the company's finances in the short term, but there is some concern longer term about just the market for a lot of these COVID treatments and whether Merck is going to be a part of that. Keep an eye on what's been going on in the travel stocks. We actually saw a big sell-off over in Europe. Of course, new lockdowns over in Hong Kong, in the UK, as well as a lot of chatter about potential lockdowns over in Israel and France. This could curtail a lot of movement. Flip up the board here because, John, you were just talking about this whole idea of the market being divorced from fundamentals. We are going to have big tech earnings this week. Microsoft, Apple, Facebook. The earnings are expected to be good there. The revenue growth expected to be good there. The margin expansion expected to be good there. But expectations have already been built into these shares here. So keep an eye as to whether they can live up to those expectations based on current valuations. Your second line there, you mentioned AMC raising almost $1 billion commitment there. The CEO, Adam Marone, basically saying that imminent bankruptcy off the table. Of course, John, he did use the word imminent. We'll see about whether long term. And if you want to talk about fundamentals, this is for Tom at the bottom of the screen. Tom, you remember the old days when CFAs used to rule the earth with their bottom-up fundamentals here. You put GameStop fundamentals into a spreadsheet, I'm not sure what you're going to get, but I can guarantee you it's not going to be $92 a share.
It's really interesting, Romaine. I mean, it is just a whole new kind of trading, whether it's the guy from Chewy coming on board, or it's a short covering off of the shorts that have been very negative on the stock. I don't know. To me, you know, it's at 5.5 standard deviations. It's come a little bit this morning, but I really don't know what regulators do about this other than to observe it.
Yeah, I don't know either. Am I allowed to walk in front of this board? I saw John was doing just this really great strut.
Go wild.
Back and forth. I mean, I have to take some tips from. By the way, John, it's nice to see you in the flesh for a change.
Thank you, mate. I appreciate that.
I don't quite
Loosen
have
up,
the
Romaine.
same
Stretch your legs. This is what this program's about. Just break the rules. Loosen up. Just take a stroll.
I feel like anything goes in this show. You guys have been talking sports all morning, I believe, right?
Do you want to weigh in on Tom Brady? Romaine,
yeah, Romaine, do you think Tom Brady's good looking?
He is a very handsome man, Tom.
There you go.
And I should point out, Tom Keene, you're the best looking guy in radio.
Yeah, thank you. Yeah, it's been said too many times before.
That's all I got.
Romaine Bostic, thank you so much. On the equity markets, and we'll try to keep away from Mr. Brady here for a moment. We'll talk to Gina Martin-Adams about the field goal Green Bay kicked as well. No, we won't. Gina Martin-Adams with us, the Bloomberg Intelligence. Gina, you know, Romaine just brought up an important point, which does the earnings matter anymore? Does security analysis matter anymore with the distortions that we've seen from the Federal Reserve?
I think it does. I mean, I think that there's certainly some significant distortions coming from the technical levels. that stocks had gotten to. I mean, we were in this sort of bizarro world in which companies that beat earnings expectations are getting punished for those beats. Companies that missed earnings expectations are actually getting a stock price reward for misses. We're early in the earnings season first, so I think you want to give it a little bit of time to play out. We're going into tech earnings, which are obviously a huge portion of the market cap of the index. These are stocks that have actually lagged. Facebook, Microsoft have peaked all the way back in September and have not been trading particularly well relative to the rest of the market. So we may experience the opposite over the course of this week. The companies that lagged could do pretty well as long as they produce reasonable earnings expectations. I think, frankly, what's happening is, yes, the Fed has had a huge hand in this. Yes, the fiscal policymakers are also having a heavy hand in driving market outcomes. But frankly, the reality is we're going to experience economic recovery over the course of 2021. Even baby steps in the economy translate to positive earnings growth from what has been extremely negative earnings growth. And the market's been trading on that concept for some time. So yes, you get these fits and starts and some anomalies in the market. We're in one of those right now, but that doesn't mean the overall trend is completely false or somehow not underpinned by an improvement in fundamentals. We will have an improvement in fundamentals in 2021. We're now just arguing about the extent of that improvement.
Well, Gina, and there's also an argument about whether we've already baked in the entirety of that improvement and whether some of the very hot consensus trades, I'm thinking the rotation trade has gone too far, HSBC coming out and saying that they're starting to look at fading the reflation trade. Do you think that the renewed energy behind the big tech stocks indicates a reversal or perhaps a fading of that reflation trade?
Yeah, I mean, I think that's very short term for sure. We've gotten to a point where small caps were extraordinarily overbought. Value stocks were overbought as of last week. Even emerging market equities, the flows into emerging markets look relatively extreme. So our big three themes that we anticipate driving performance in 2021 have already become short-term overbought. But does that mean they're long-term overbought? I mean, you got to a point where small caps were trading 2 standard deviations below large cap stocks. They're still trading 1 standard deviation below large cap stocks. In the last cycle, they outperformed for 5 years. And we've sort of mimicked that, but just the early stages of that outperformance so far. So I think it's a bit early to say, hey, it's all over. We're going to go back to tech as the longer term trade. But I do think in the short run, you got overinflated on some of these themes. We're probably due for a bit of a corrective process. The signals from earnings season suggest that we're in that consolidation or correction of that overbought condition. But longer term, it's more likely that these themes continue to endure. They were extremely oversold. They're just starting to bounce back from those oversold conditions. Longer term, the valuation discounts are still there. The earnings argument is still there as well.
Meanwhile, there are pockets of froth. We hear that from everybody. That's the kind way of saying that perhaps there are areas where there are bubbles. Could you see a deflation of some of these bubbles, whether it's GameStop, whether it's Bitcoin, while the rest of the market continues to grind higher? In other words, where they're basically inconsequential for the broader trend?
Yeah, I think that it's very selective. I mean, frankly, you could argue that the entire financial markets are in a bubble reflecting what's happened with policy over the course of the last couple of years. I do think that what you'll see is a normalization over the course of the cycle. Most of this sort of bubble language is just built upon the idea that interest rates are at rock bottom lows. There's plenty of liquidity and capital floating around there. It's going toward all manner of assets, including not only stocks, but as you mentioned, crypto, even commodity prices have reinflated substantially. So, that tells you where the source of the bubble is coming from. It's come from policymakers. It's come from the Fed. Are they going to change the game anytime soon? Are we going to see the Fed reverse policy? It seems unlikely, but we'll get some more commentary this week. Are we going to see fiscal policymakers start to take the punch bowl away? Seems incredibly unlikely when we're talking about another $2 trillion of infusion into the U.S. economy. So I would say it's a bit early to say that the bubble, so to speak, in asset classes globally is over. If anything, more than likely, we continue to see the bubble broadly inflate over the course of this year.
So, Gina, do you consider policy at central banks part of the fundamentals? And if you do, can you actually call any of this a bubble?
No, I absolutely consider policy of the central banks essential for driving interest rate, which is essential for driving valuations for stocks. It's all related. So I do think that policymakers have a very heavy hand in driving outcomes. Now, you have a really anomalous scenario that occurred over the course of 2020, and that was not only were policymakers reinflating to try to soothe the concerns of the economy, the struggles of the economy, but you also had direct infusions into certain asset classes. We all remember back in March, April, May of last year when the Fed was directly purchasing corporate credit. This harkens back to something that's happened in Japan for the better part of a decade, direct purchases of equities, which creates a different sort of buyer. It creates a different balance of supply and demand. Supply and demand being sort of the other way of looking at stocks certainly has been altered over the course of 2020. Will we see a reversal in those policies in 2021? It's unlikely, but we probably will start to see a reversal in some of those policies in 2022 and 2023. And we need to be on guard for the reality that our supply and demand dynamic for asset classes globally includes a new player. It includes a new player in the US. It's included a new player globally for some time. But I do think that that's going to create different outcomes. They're somewhat predictable, frankly, but nonetheless, it is a different buyer and a different seller than has existed in these markets in the past.
Gina, great to catch up, as always. Good to see you. Gina Martin-Adams there of Bloomberg Intelligence. And just on that final point, Tom, I think that's where the struggle has been for many people. Certain approaches to this market are almost like religion. And for market purists, for parts of the value world, the value universe, for instance, it has just been the refusal to accept what are the new fundamentals? What is new? And part of this backdrop, and I don't even know if it's new anymore, Tom. It's been taking place now for the last 10, 15 years.
Well, it's been 10 or 15 years, and it is a great bull market that a lot of people have been partly wrong on or completely wrong on. I've got to admit, we were busting Lisa's chops about, I think it was a Goldman Sachs note today that had an edge of gloom, a tinge of gloom to it. John, the gloom crew, their heads are just spinning right now with this continued bull market.
Much more from their leader, Lisa Abramowitz, a little bit later in the program.
Dear Lord.
I'm just looking forward to more football coverage. I really am.
I know you are.
With Tom Keene, Lisa Abramowitz, I'm Jonathan Ferro. Coming up, Deborah Fuller, the University of Washington School of Medicine. Futures up 3 on the S&P. We roll over just a little bit. We're positive just a little less than 0.1%. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. There are signals that President Biden faces challenges in enacting his proposed $1.9 trillion coronavirus relief package. Both Republicans and Democrats on a call with the White House economic advisor Brian Deese asked for justification of the size of the proposal. One Republican Senator, Susan Collins, says she'll see if the bipartisan group on the call can come up with their own plan. Meanwhile, Boris Johnson and Joe Biden struck different tones on the prospect of a trade deal between their two countries. The British Prime Minister was the first European leader to receive a phone call since the inauguration. The UK statement on the call says the two discussed the benefits of a potential deal, but the US statement didn't mention trade. A new deal with the US is a top priority. And former Trump White House spokeswoman Sarah Sanders is running for governor of Arkansas. The move was expected. Sanders left the White House in 2019 to return to her home state. In a video announcing her candidacy, Sanders said that with the radical left now in charge of Washington, the governor is the last line of defense. She is the daughter of former Arkansas Governor Mike Huckabee. In Russia, the Kremlin downplayed nationwide protests demanding the release of jailed opposition leader Alexei Navalny. Western governments protested the detention of thousands of demonstrators. Tens of thousands of protesters battled riot police in freezing temperatures. They had been warned they could face charges of mass disorder for taking part. Another potential scandal at Deutsche Bank. The German lender is investigating complaints some bank employees sold risky investments to clients who didn't understand them and then shared the profits. According to the Financial Times, the probe centers around a former employee. The newspaper says it appears only Spain and Portugal-based clients were affected. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists. I'm Karina Mitchell. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
These things do evolve, and what we will do and are doing already is making preparations for the possibility that down the pike, down the line, we may need to modify and upgrade the vaccines. We don't need to do that right now. The best way to prevent the further evolution of these mutants is to vaccinate as many people as possible.
It's the vaccine race. It's a different kind of vaccine race. That was Dr. Fauci there, speaking on CBS's Face the Nation over the weekend from New York City this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Live on Bloomberg TV and radio, here's the price action this Monday morning to get you started. Futures are basically unchanged for a moment, and then we get a lift again, a bounce to about 0.1% into positive territory. On the NASDAQ, up 0.9%. The NASDAQ 100 last week having a huge week, up a little more than 4%. Best weekly gain on the NASDAQ 100 going back to early November. That's a story for the equity market this morning, Tom.
John, you also mentioned Bitcoin gets a bid now, 34,000. We're watching that tick by tick as we're watching GameStop as well. Right now on the virus, a definitive conversation on COVID with Deborah Fuller of the University of Washington School of Medicine and Microbiology professor. I can't say enough about the esteem of their program. Dr. Fuller, I want to go to the idea that we were all afraid of measles, and maybe anti-vaxxers were less afraid of measles now. And there's different variants of measles, D4, B2, whatever those numbers are. Are the variants of this virus to be treated like the variants of other things we've contained, or are the variants here different?
The variants here could be quite different, and that's just because we have increasing evidence that some of these new SARS-CoV-2 variants are not only gaining an ability to transmit more efficiently, but developing mutations that could potentially evade antibody immune responses. And that would potentially suggest that our current vaccines, it might impact the efficacy of our current vaccines. Now, our vaccines are very high efficacy, much higher than 90%. So we're not talking about complete loss of protection by the vaccines. We're talking about a bit of a decline, let's say maybe from 95% to 85%. That's still a very, very effective vaccine, but it's something that as vaccinologists we keep an eye on, because it gets to a certain threshold, we may get to a point where we have to update those vaccines.
Well, Dr. Fuller, some people would put this as a race, basically a race to get enough people vaccinated before the virus mutates enough to set you back further and cause an increased circulation of the virus. How are we doing in that race?
Yeah, it truly is a race between viral evolution and vaccination rate. The goal is to reach herd immunity. We are currently estimating about 70 to 80% of the population immune to be able to shut down this pandemic. But herd immunity depends on two things, and one is how transmissible is the virus and how efficacious is your vaccine. So as the virus mutates, and we talked about that it can mutate to increase transmission and potentially reduce vaccine efficacy, that raises the bar in terms of how many people we have to vaccinate. So it's like this cycle that pushes our goalposts further down the line. So it truly is a race.
And Dr. Fuller, perhaps this is sort of an underappreciated aspect of this pandemic, people expecting a recovery, and yet not necessarily understanding how much this new strain of virus that is more transmissible, possibly, potentially, according to some reports, more virulent, how much that has accelerated the spread of the pandemic. How much has that set us back in terms of a need to vaccinate more people? Otherwise, we're going to be dealing with lockdowns and other types of social distancing measures instead.
I think we started hearing early on when we started talking about herd immunity, we were thinking 60, 65%, and now what we're hearing is 70, 80%, and that could even go higher. And of course, that's a huge difference in terms of the numbers of people that will need to receive the vaccine to get to that point. And the more people you have to vaccinate, the longer it's going to take to get there.
Should we assume we will see a traditional vaccine? Merck with some challenges today, all the way J&J, other experts like you, Dr. Fuller, talking about the efficacy of a more traditional vaccine. Do we need that?
In terms of more traditional vaccines, like you mean like the kinds that we had before the RNA vaccines?
Yes,
is that what you're referring to?
Yes.
Yeah, so the J&J one that's coming out, I would not categorize that as traditional. That's actually kind of new as well. It's just using a different way to deliver genetic material into our cells so that we can produce the vaccine. So it's actually in some respects quite similar to the RNA vaccines. And the advantage of both of these types of vaccines is that should the virus undergo an evolution where it is starting to reduce their efficacy, they are what we call plug-and-play vaccines. They're very, very quick to update. You just have to swap out the genetic material and away you go to producing them. In the past, our traditional vaccines would take somewhere between 8 to 9 months to update. These ones, they're going to be weeks, maybe a month to start to get back out again. So that's good news for us that these are the types of vaccines that can chase that viral evolution much quicker.
Doctor, just to wrap things up, could we just get your assessment of the administration's goal to vaccinate 1 million Americans per day for 100 days? We're already around those levels and have been now for about a week or so. I wonder from your perspective, Doctor, whether the goal itself is just not bold enough or whether there will be supply issues down the road that we need to address at the moment that actually make that 1 million rate quite optimistic.
Right. Well, it sounds impressive, but it may not be enough. I think it's a good start to get to, but if we want to get to a goal where we keep talking about wanting to sort of be mask-free by Labor Day or something, we're probably going to need to start there and then quickly accelerate, maybe double or even triple that rate to get to there. But I think once the mechanisms are in place to achieve that consistently, 1 million doses a day, then that's the kind of thing they could leverage to continue to increase the rate and double and even triple that.
Doctor, just quickly, do you have a placeholder on the calendar? Is there a marker out there for you that you're thinking about when things start to get pared back, restrictions start to be removed again?
Well, I always keep telling people that I'd love to have a mask-free day by Labor Day, but, and that goes from the perspective of, I run the lab with 20 people. Many of them are young parents who are eager to see those kids go back to school in the fall and get things back to normal.
Doctor, appreciate your time. Come back soon. Dr. Deborah Fuller there of the University of Washington School of Medicine. Lisa mentioning the vaccine race, and just to give you an idea of the numbers right now, the way we track it here at Bloomberg are through doses per 100 people. Israel, we're familiar with the story, just fantastic. 40 doses per 100 people, Tom. The United States, just south of 7. The UK up by 10. Do you know where Germany's at right now?
I have no idea.
2.
Yeah,
2. And the gap is not getting narrower. It's getting wider.
A lot of it, I think, is cultural. And again, a major shout out to NYU Langone, who I thought was good. I don't know what their ratio is, John, or anything like that, but I was thunderstruck by the intensity, the manufacturing process, John, of just getting the people in, getting up. Yeah. My walker, I had to put my walker aside because there's so many older
How is that
people
walker?
there.
How's that going?
Walker's good. It doesn't fold up. It doesn't fold up in the winter like it should.
Got tennis balls on the front.
There are a lot of good-looking guys.
So
right. It's not one with wheels.
No. It's got tennis balls.
No, I don't have the wheels yet.
From New York City. It's much more still to come. I'm sure you can't wait. I always feel like I have to confirm, but this is Bloomberg.
开始做直播是在今年年初的时候，就主要是去年的话，我们参加更多的是线下的活动。今年大家都知道，由于中国的这个疫情，导致这些线下活动不能办了，所以更多的交流方式在线上。就今年春节之后，主要是开始在线上通过直播的方式跟粉丝进行交流。直播可能对于投资者来说是陪伴投资者，大家讲讲市场啊，讲讲投资的心理啊，这样的话就可以让大家在投资的时候，心情更平缓。平缓的话，能做到长期持有；长期持有的话，才可能赚钱。相对而言，长期持有的话，才可能赚钱。相对而言，线上可能覆盖的人群更多，因为可能疫情，很多人在家里看直播的人更多。反而可能，我这个工作可能是反而是受益于疫情的一个工作吧。
明天希望高开赚钱，
祝大家赚大钱。
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Situation, in a situation like this, you do whatever it takes.
We're still living through a very disinflationary COVID shock.
Once the vaccine has been rolled out in a meaningful way, then we really will start to see some very positive growth.
Banks are doing what they need to do, which is to revive an economy.
Markets have been conditioned to expect ample and predictable support from central banks.
The public still has money in reserve, but the money is not circulating in the economy because people do not want to spend.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Thrilled you're with us. A simulcast. Good morning on Bloomberg Radio. Good morning on Bloomberg Television. An extraordinary, eventful week. It's always busy this time of year, but you've got the overlay of what's going on in Washington. You've got a virtual Davos, the Chinese president speaking earlier, and then you've got the markets with all sorts of talk of bubbles. We're going to really get to that in a moment. We're thrilled that Visha Tarapata will be with us with Morgan Stanley here in a moment on the bond bubble that may be out there. John, just an open question as you migrate back to New York. How was your sabbatical?
My sabbatical was wonderful. I read a lot about bubbles, just like you did, Tom, and it feels like a bubble in bubbles. And for me, what's interesting is not the magnitude. We talk a lot about that. How big is the distortion? What we don't talk enough about is the duration of the distortion. And this distortion existed pre-COVID and has persisted for the best part of 10 years now, Tom. And typically we think of bubbles as something temporary. Large distortions, small amount of time, pop. In the bond market and fixed income, this is a story now for the last several decades, and largely because of policy and central bankers. They hold the keys to this. They hold the keys to unlocking the bubble as well. If they step back too quickly, and Tom, I don't see any appetite to do that anytime soon. This is a very unique situation that we need to think about a little bit more deeply, away from just magnitude and the size of the distortion, to a simple question with a complex answer. How long can it persist?
It may be, I like the duration idea, it may be yield lower, price up, the 2-year yield 1/8 of a percentage point. Right now, Lisa, just within all the reading, we've got the Dow up 7%, SPX 12 months trailing up 17%, NASDAQ 100 up 45%. Who knows, it'll be up 60% by the end of the week. Lisa, within all your reading on gloom this weekend, what caught your attention?
The question of whether you can have a bubble in specific corners, whether it's certain SPACs, the special purpose acquisition companies, or whether it's specific stocks, whether you can have a bubble that's allowed to deflate in those stocks, in those securities, in those bonds, while the rest of the market continues to chug higher and is supported by something more fundamental, including, the John's point, the fundamental of the backdrop of central bankers holding interest rates incredibly low. But this really is raised by a GameStop. We keep talking about it, but just to put this into perspective, this is a stock that for 6 years has lost value. Their earnings, their annual sales have been down 40% over the past 2 years. And meanwhile, traders are willing to pay more than 400% of what the street says is worthwhile for these shares. On a business case, this does not make sense, Tom.
Right.
On a Reddit case, perhaps it does, as you've got enthusiasts saying, games, we like games, and you know what? We're playing them.
You know, we like games. I mean, I'm loving Apex Legends. I'm in Ascension right now. It's not as good as Meltdown, but you know, it works, John. John, this is really important as we begin this important conversation. John, do you look at bubbles as segmented, as Lisa's talking about, or is it symbolic of an entire financial system?
I think everyone has its own character, Tom, but typically, even if it is concentrated, it can have widespread impact. We saw that in 2007. We saw different kind of things happen in history. I don't think you can have this big, broad, sweeping analysis of concentrated froth and decide whether it's going to stay isolated or whether it spreads. If we're talking about big tech, then we're talking about the market. If we're talking about a couple of names that retail are kicking around, then we're not talking about the broader market. What are we talking about here? GameStop? Or are we talking about Amazon, Microsoft, Apple, the names that make up the bulk of this stock market?
Clearly, that's our Therm Alex Webb Smart this morning on the uniqueness, the persistency of revenue growth at those big tech earners. Red and green on the screen right now. Dow goes the wrong way. NASDAQ 100 having a good morning of it. VIX goes the wrong way, 23.30, a little tension there. I'm not going to do much on the data because it's pretty somnolent, as John says, 1.07% on the 10-year yield. Renminbi, after the president's speech, 6.48%. Xi not moving renminbi this morning. Always moving and interested in the markets is Vishy Cherapater of Morgan Stanley, their global director of fixed income research. Vishy, is the bond market in a bubble? I mean, is the equity market discrete, or is your space in a bubble like Mike Wilson's is?
I think the question of really whether the bond market is in a bubble or not really is, I don't look at it in that sense. I look at what are the expectations of growth and what's the central bank policy and what the fiscal policy, and how do all these three things come together. And that's the key to whether rates or where they are today and where they are going in the future. So I think the key to us in terms of thinking about rates today is really how big the incremental fiscal package going to be, and how soon it can happen. That really, this policy, fiscal policy, really drives where rates are going to go forward. And we think that from the monetary policy side, we expect really not much change into the entire year. The Fed will keep buying the bonds as they have clearly indicated at the pace they're buying now. They'll keep that pace, we expect, through the year, and really no change in the front end of the curve. So what that means really is entirely the bond market is going to be driven by the fiscal policy. How much more fiscal impetus, fiscal stimulus is going to come in, and how is it going to be funded, and what is the timing of that? And those are the key things.
Let's go there, Vishy. Size and time. How big? How quickly? What's the answer? What's the view at Morgan Stanley?
So our view is 1 to 1.1 trillion. It is probably more likely to happen. And perhaps over the course of the year, we might see some more infrastructure built. And the infrastructure build might mean another 100 billion. It's a 10-year infrastructure package. So this year, maybe another 100 billion. So we think that the 1.9 trillion that that the president has put forth will probably end up more in the 1 to 1.1 trillion.
So who absorbs that? Who buys all that debt?
I think there's as long as this happens in there is substantial amount of interest in the market. So we do expect that the interest rates will gradually rise. So our year-end expectation at this point is our base case is 1.45% for the 10-year. We might drift if this numbers become bigger. We might drift to the 1.75% range. But I think they consider the yield differential between the United States yields and the rest of the world yields, the rest of the developed markets yields, there is still a substantial bid for the U.S. rates product.
Vishy, that move potentially to 175, can you decompose that just a little bit? The forces that underpin that move, what do you think gets us there? Is it inflation expectations? Is it coming from somewhere else?
I think it's a combination of a few things. First thing, as I said, is how much is the fiscal policy gets there, and from that, how much issuance will have to happen, and we do expect inflation expectations to continue to rise. We are in a reflation camp, so there will be a contribution from inflation expectations going higher, and we also see that remember we also have a strong view on growth. So as growth picks up, we will expect to see this happen gradually. And I think importantly, John, I don't think this will happen in a very jerky fashion or like a sudden spike. That is not in our base case. Then the Fed is very conscious of what happened during the taper tantrum, and they are very conscious to ensure that that doesn't happen.
And yet Mike Wilson of Morgan Stanley, your colleague, said that markets don't often work in a linear fashion. They can be much jerkier. That tends to be the moves that you do see. And meanwhile, you've got billionaire Paul Singer putting out a warning over the weekend saying that 1970s style inflation can return. There could be a massive spike in longer term bond yields. What do you say to the burgeoning inflationistas that seem to be returning a little bit on the edges here?
I do think that the inflation will pick up. We do think the inflation will pick up, but not in the 70s style inflation in our mind. So we are, the central bankers have not been able to engineer a consistent 2% type of inflation for the last couple of decades. So we do expect we are where we are. We expect a gradual pickup in inflation. We'll probably get to a 2% level by the end of the year. And we've also seen the Fed respond to us that they would be much more tolerant of inflation going, they want higher, meaning with this average inflation targeting, they would need to see inflation perhaps in the higher than 2%, maybe 2.5% for some time before they, put the brakes onto the economy through monetary policy. So I think, higher inflation, but not a dramatically higher inflation. In the 2% range, that would be what the economy would demand because of the economic response to both monetary and fiscal policy impulses.
Not too hot, not too cold, just right. Vishy, always good to see you. Vishy Tripatur of Morgan Stanley. Lisa, will those inflation pressures endure? And where did they come from? Where did they come from, I think, is really important. If it's just a short-term supply chain story, just a short-term story of people re-engaging with the economy, with the service sector, when restrictions are lifted, or whether it's something longer-term, because we close the output gap really quickly and the demand starts to come back fast. The latter, I think, is what drives central banks. I don't think the former is going to with this central bank, not with this Fed.
There are a lot of unknowns. I really haven't seen the degree of uncertainty that there currently is around inflation in my entire career. And the question is not only the amount of money that's being pumped into the system and the stimulus that people are going to go out and spend on stuff and on services when they can, but you also have supply chain backups that are causing big increases in prices. And if that alone happens, that's temporary. But combined with some of these other factors, that's a question, John.
Is Tom still with us? Is he still around? Is Tom still with us?
No,
still there?
I figured, John, it's because you're back.
You're looking at Tom Brady. Oh, we muted him.
We're muted him.
Beautiful. This is
seriously
good. This was my gift.
It's great radio.
Coming back to the office, this was my gift. Just to get the
button. You've got the mute button, and you use it, I'm
going to use it a lot. Coming up on this program, George Magnus, Oxford University China Centre Research Associate. Really looking forward to him to tell us what's going on in that country. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. Futures up about 3 or 4, up 0.1% of the S&P. This is Bloomberg.
With the First Word News, I'm Karina Mitchell. President Biden hearing it from Republicans and Democrats. Lawmakers want him to justify the $1.9 trillion price tag for his COVID-19 relief plan. 16 Senate Democrats and Republicans spoke on a call with the White House economic advisor Brian Deese. Moderate Republican Senator Susan Collins says she'll press the bipartisan group to come up with a narrower plan. Another grim marker for the U.S. in the year-long pandemic fight. Total infections have now exceeded 25 million, the world's highest total. That is roughly 8% of the population. The death toll has now topped 417,000. In Mexico, President Andrés Manuel López Obrador has tested positive for the coronavirus. The leader that Mexicans refer to as AMLO is 67 years old and says his symptoms are mild. López Obrador has generally held a lax approach to the virus, refusing to impose mandatory lockdowns and usually doesn't wear a mask. Meanwhile, China's President Xi Jinping called on the world to abandon what he called an outdated Cold War mentality. At the Davos Agenda event, Xi signaled that China will continue to forge his own path regardless of Western criticism. Those were his first remarks since Joe Biden took office. Xi warned, quote, confrontation will lead us to a dead end. And shares of the world's largest movie theater chain AMC are soaring today. The company says it's raised $917 million in debt and equity since mid-December, and talk of an imminent bankruptcy is now off the table. Lockdowns have forced AMC to keep its theaters closed. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. This is Bloomberg.
Continues to be, recovering well. And with the opening up that was decided at the last 5-year plan, that is a golden opportunity for many international banks.
So we'll look to double our footprint across IB and also wealth management and asset management in the 3 to 5 year time frame.
Growth outlook structurally is very strong. But it does need to consolidate and allow time to help the share price appreciation to move more in sync with the growth.
So China can avoid further decoupling if they stop these inappropriate actions.
But at the moment, we really want to see the dust settle first on international relationships, on China's role in the global economy.
I don't see a likelihood of a big change in the policy with the change of administrations.
history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Chinese are certainly the most advanced in the world in terms of the digitalization of retail finance. I think China's pausing to reflect as to whether it has, from a financial stability perspective, the right levers to control what would just simply be the aggregation of individual consumers all doing the same thing at the same time.
Douglas Flint there, the Standard Life Aberdeen chairman, on China. Much more on that in just a moment. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. For our audience worldwide, live on Bloomberg TV and radio, this is Bloomberg Surveillance. With about 1 hour and 12 minutes to go until the opening bell, here's a story for the equity market. Outperformance on the Nasdaq, the S&P 500 just about positive, up 5 on the S&P, a little more than 1/10 of 1% gain there. Going into the Fed on Wednesday, curves a bit flatter, yields a little bit lower on a 10-year, down to 1.0652%. We will get to the Euro story in just a moment. I'm fascinated by what's happening in Europe now for all the wrong reasons on the vaccine front. Euro dollar 121.52, coming in about 1/10 of 1% there, Tom. Slightly weaker euro.
Yeah, I haven't seen euro yen break down. What you do, folks, is you take out the dollar and you look at the euro as it relates to the yen, and that really hasn't broken down strong yen yet. So that'll be the litmus paper. I do want to mention, folks, this is an incredibly rich and busy earnings week as well. We'll have full coverage for you on radio and television. As John mentioned, China, as we heard President Xi at the Davos agenda, we now speak to truly an authority on this. George Magnus is at Oxford University's China Center, and we're thrilled he could join us after his wonderful, hugely readable effort, Red Flags. George Magnus, thrilled to have you on this day where the leader of China speaks. What did he not say? He's very good at saying the appropriate things. What did he not speak of?
Well, I only heard kind of brief snippets of his address. I mean, what he didn't say, actually, of course, are the things that you would never expect him to say, which, of course, are the nuances about China's economic recovery. I mean, he does talk about, we mustn't have a Cold War mentality, which he didn't say he was partially responsible for injecting into the global system. He did say that decoupling leads to division, which is obviously a pointed remark of the United States, not saying that actually China has been doing selective decoupling for years. And he did say that openness and inclusiveness are really important, which is something that he didn't say China doesn't really practice. So, there's a lot of the things that he said that are the opposite of actually what actually takes place in the country. And
George, this is the big question, isn't it? What can the incoming administration do to actually change the behavior of China? Getting them to say the right things on the international stage at the World Economic Forum, that's one thing. Getting them to act differently is another. Do you expect a change in approach from the new administration in the United States?
I expect a change of tone, but not really a change of substance, Jonathan. I think and we've seen enough and heard enough already, even though it's only like a week old, not even the administration, of the appointees who are in key positions. And I don't really hear or sense any marked change of direction. So I think it would be unusual, given what we know about the individuals concerned, if there wasn't a change of tone. And certainly strengthening alliances, whether that's with Europe or with the Quad, so Australia, Japan and India, much stronger overtures towards Indo-Pacific countries. I mean, these kinds of things, I think, will be forthcoming. And I think that is something which the Chinese actually were probably fearful of, and why they probably didn't want him elected. But I think that's where I think sort of the rubber's going to meet the road, proverbially, is sort of a more united kind of front amongst countries to confront China on very, very important important issues, but not necessarily on tariffs, which were never really going to change anything.
Meanwhile, financial markets have been voting between the U.S. and China and opting for China. There was data out of the UN saying that China overtook the United States for the first time as the world's top destination for new foreign direct investments this past year. And this has been ongoing with a huge shift of financial firms trying to expand in China despite some of these ongoing tensions between the U.S. And China. Do you think that this money is well-founded in terms of its bet on the Chinese economy going forward based on its preeminence in how it has recovered from the pandemic versus, say, the U.S. and Europe?
Well, Lisa, you know, it's like so many things. There's so much nuance involved. I mean, I'm not saying that every company that puts money to work in China is kind of throwing it down the drain. But actually, we also have to recognize, there's a lot of self-serving money that's going into China and justifying it on the basis of being there for that reason. But I think that the essence of the kind of the UN report or the UNCTAD report you referred to, I mean, it's not the world is basically kind of imploded because of the pandemic. Foreign direct investment ground to a halt. China managed to its credit, with draconian measures to suppress COVID and allow its economy to come back, reasonably well during the last part of 2020, and the FDI flows going into China went up by 4%. We're not talking about a huge kind of amount, but I do think credit where credit's due. I mean, they've certainly managed to achieve and accomplish something with their economy, which the rest of us obviously are looking at slightly green and tinged with envy. But in the fullness of time, one imagines when we get on top of our own pandemic problems, I think the catch-up will become quite apparent.
George, great to catch up, sir. Please come back soon. So much to talk about. Author of Red Flags, George Magnus, Oxford University China Centre Research Associate. Tom, the World Economic Forum, you and I have discussed this every 12 months, whether that forum has become totally redundant. I find it amazing that over the weekend, Klaus Schwab was in the press talking about not inviting the former President Donald Trump back to the forum. At the same time, there's reports that President Putin can address the forum and that President Xi Jinping gets to address the forum this morning. A leader of a country, this country, the United States, and the outgoing administration accused of genocide just a couple of weeks ago, Tom. So get your head around that. The World Economic Forum, the leader of a country that the United States of America, the outgoing administration accused of genocide, gets to address the World Economic Forum. But the former president of the United States, according to Klaus Schwab in the press, and we'll wait to see if he reconfirms those comments, is hesitant about inviting back a former U.S. president.
Well, that's different than inviting back versus speaking. I mean, I've seen former prime ministers there and many others as well. To invite Mr. Trump back seems to make common sense, but the tradition is that the sitting officials are the ones that speak, whether it's Mr. Sarkozy years ago, and of course the gentleman you mentioned, and of course they, I'm sure, would want to hear from President Biden as well.
And I think anyone that addresses the forum, Tom, anyone that gets that stage, should face the questioning from a free press.
We've never seen that. Oh, have we never seen that?
Then they shouldn't get the stage.
That's a sensitive topic there.
And you shouldn't get the speaker. You shouldn't get the megaphone if you don't get the questions afterwards. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. For our audience worldwide, coming up, Democratic Congressman Dwight Evans of Pennsylvania. As we count you down to the opening bell, about 1 hour and 4 minutes away. Futures up 0.16% on the S&P. This is Bloomberg.
For a typical clothes wash, up to 700,000 fibres can come off our clothes.
Permet de collecter environ 3 à 5 tonnes de déchets de PET chaque mois. Donc une partie est utilisée pour faire des bateaux, une autre partie pour faire d'autres poubelles et d'autres parties, bouteilles sont plutôt stockées que nous fournissons à certains partenaires.
From New York City, this is Bloomberg Surveillance live on Bloomberg TV and radio. Counting you down to the opening bell, counting you down to an important Fed meeting as well later this week. Going into all of that this Monday morning, futures positive just about on the S&P 500, but the clear outperformance is on the NASDAQ. The NASDAQ 100 up by about 1 full percentage point. Big outperformance last week as well. It continues into Monday as we start a new trading week. Switch up the board into the bond market. Shape of the curves, 2s, 10s, 30s. Bit flatter, bit at the long end, the bull flattener. Pushing this yield lower by about 3 basis points on a 30-year to 182, let's call it. 1.06% on a 10-year, down a couple of basis points or so. Don't want to sit on this too long. We'll talk much more about it through the week as we get to that taper conversation around the Federal Reserve this Wednesday. I'd like to finish on this, euro-dollar in foreign exchange. This, for me, gets a little bit more interesting. Euro-dollar 121.52, coming in about 0.1%. We closed out 2020 and started 2021 by having this conversation about global growth. And anyone familiar with the dollar smile, as things start to get good, the dollar starts to weaken. One way of expressing that is a nice long euro-dollar call. Lots of people did that. You got that move through 120, through 121. And this is where we sit at the moment. Is that going to be the dominant story for foreign exchange, Tom? Is it still going to be that global recovery, synchronized growth through 2021? And how do you leverage that story through Europe, through EM? Or do we start to think about growth differentials a little bit more in the outlook? And do we start to express that through various currency pairs, including this one, including euro-dollar? The reason I bring this up is because the vaccination rollout is not synchronized. It's very fragmented. And I mentioned the numbers a little bit earlier this morning. So per 100 people in each and every individual country, we track the doses. Israel, top of the pile, 40 doses per 100 people. The United States, about 6.8. The UK, somewhere near 10. Germany, 2. And that gap is not getting narrower, that gap is getting wider. So at what point, Tom, do you start to express that in your outlook for economic growth and say, you know what, the United States relative to Europe, US outperformance, European underperformance, I'm going to push that through euro-dollar, euro-negative, instead of the story that we've heard so many times over the last couple of months, which is global cycle, synchronized growth, dollar weaker, euro stronger. Just wonder how that tug of war starts to develop in the coming weeks and months.
But what's so important here, John, and this goes again to Washington and the austerity stimulus battle in Europe and in the United States as expressed through euro-dollar, is not so much the debate over stimulus now, but the just assumption, John, that there will be 2 forms of government legislation government programs, whether it's 1.x trillion now. John, there's just an assumption of a follow-on program wrapped around more enduring programs for the nation. And that, any way you put it, that's a wallop, that's a stimulus into the nation as well, and that's going to boost GDP. And I guess the assumption is Euro 119, Euro 118, but I don't want to be predicting anything.
Yeah, but Tom, you used the word a couple of times there, stimulus. It's only stimulus if the economy is open. Otherwise, it's just aid. Where does the money go if it's stimulus? It goes into the savings account. So the United States can do more, and we'll have that conversation in just a moment. If the economy reopens, that money will get spent as people engage with the service sector again. At the moment, though, we're still talking about aid because people have lost their job and need to pay bills. So let's say you have in the United States, just for the sake of argument, equivalent population to Europe, just for the purpose of this conversation, $1 trillion plan in the United States, $1 trillion plan in Europe. If the US is opening, I'm not going to look at the fiscal programs and say we're going to have synchronized growth. If the US is opening and European markets are not open, if the European economy is still closed down because they haven't had the vaccination rollout in the same way as here in the States, I think you start having that conversation about growth differentials a lot more. And what surprised me at the moment is we're just about starting to have that chat right now, but we're not seeing it in this market yet. We're not seeing it in this market, not in foreign exchange and not in a pronounced way. And I think in the coming weeks, we've got to have that conversation just a little bit more. If the US continues at this rate, the US opens earlier than Europe. That's just base case. That's obvious. Look at the rollout compared to Europe right now. It's pretty clear. So at what point do we start to push this through markets? Right now, I don't see it.
Well, we don't see it within foreign exchange, but clearly it's expressed within huge ambiguous inflation calls as well. Lisa, a lot of this will be clarity by the time we stagger to the end of this week, where it's on the edge of 100 companies within SPX will report. And there's some huge disparities here between some companies that have really adjusted and some have even prospered versus others that have a real struggle.
Yeah, the haves and the have-nots. The bigger the company, typically, the better that they've done. And then the companies that have no revenue whatsoever, I'm thinking of Carnival and AMC, still can raise money to get through to the other side. The interesting thing, Tom, though, and the thing that John was articulating was this idea that the vaccination schedule may be the most important statistic to track in terms of foreign exchange and in terms of where to put your money. This is what JP Morgan analysts said over the weekend, and it really raises a question about some of the consensus trades, given the fact that we had this bet on dollar weakness that seems to be perhaps getting questioned by the fact that the U.S. is doing a heck of a lot better than Europe, than the European Union when it comes to the rollout, Tom.
Well, again, and it comes back to the basic idea of earnings. There's a huge mystery here, folks. Let me give you these levels again. Let me start with SPX only because Pharaoh's back in the building. 3,831, 3,831 on the Dow. John on the 4,000 watch on SPX. Dow, an important index, I would suggest, 31,000, okay. 30,718. The Dow having a tough day of it. Maybe Merck's there and, a couple other noises within only 30 important companies. And then the NASDAQ 100, 13,483 with a life of its own. Right now, as we spoke to Mr. Stile of Wisconsin an hour ago, we speak with Mr. Evans of Philadelphia and Pennsylvania. His district is important. It is hugely Democratic in guidance, and he is the leader of the 3rd District of Pennsylvania. We're thrilled that Congressman Evans could join us this morning. Dwight Evans, you have a new Congress. You're in charge. You've got a president. You've got your House again. And lo and behold, 50-50, Vice President Harris will give that important vote in the Senate. What does your team need to do to affect policy?
I think first to say good morning to you, and I think that what we need to do is attempt to bring people together within the Congress. I think that with President Biden and Vice President Harris, the attempt to bring people together and first crush the virus. We must crush the virus. There's a direct connection between crushing the virus and the economy coming back. You need to do both of those combinations. And I believe that President Biden and Vice President Harris will demonstrate that type of leadership. So they will first start off with the vaccine distribution. And in the initiative that the president has put forward is the initiative for the distribution of the vaccine. which I think is very essential in terms of dealing with this problem. The second part of it is dealing with the economy. And dealing with the economy in terms of small businesses, investing in infrastructure, like schools reopening, those type of assets. And the president-elect, or the president, as he stated, is basically attempting to deal with both sides, the Democrats and the Republicans. And I think that we're in a good position as a result of that.
Congressman Shirley Chisholm got the Black Caucus going. Charles Rangel renamed it in the 70s, I believe it was. And you now provide important leadership there. You are joined by Reverend Warnock of Georgia, and you're also joined by a Vice President of the United States with an historic heritage. How will the new Black Caucus look going forward?
Well, I think that the new Black Caucus will look where it wants to get something done, which is very essential. We know that either party cannot do it by themselves, and that's a reality. So the Black Caucus, as I said, will attempt to form an alliance to attack the virus and then figure out how you deal with small businesses. That's very important in terms of rebuilding, building back this economy back. That's a reality that we face. I believe that the president is given the opportunity, can do those things. You're not talking about somebody who is new at this. President Biden and Vice President Harris have the necessary skill set. When you look at historically President's experience, he has shown years of experience in the Senate, Vice President of the United States. He has what I believe is necessary. You're talking about 60 members in the Congressional Black Caucus. You're talking about 6 members on the Ways and Means Committee. So I think when you look at it, you basically have people who have the ability to bring it together if given the opportunity to implement the vision and the agenda that he has.
Representative, there's a question about impeachment at this point and the wisdom behind going forward with the trial, given the immediacy of both the vaccination rollout as well as the aid needed to get to people. Do you think that it is a mistake to move ahead so quickly with impeaching the former President Trump?
I believe we can do more than one thing. I believe it's a question of accountability. The House has voted for impeachment, and that is now passed over to the Senate. I believe that we can conduct both. We can implement the agenda regarding the virus and the economy, and we also can deal with impeachment. It is a question of accountability. You can't ignore, it's not like the Constitution has written somewhere in there where some document where it states that you can avoid the aspect of accountability. No one is above the question of accountability. I believe that that process will be conducted in a very fair, open way, and we should move forward.
Congressman, thanks for being with us this morning, and we appreciate your patience as we had some technical problems just moments ago. Please come back soon. Democratic Congressman there, Dwight Evans of Pennsylvania. Futures turning just a little bit negative. Headlines coming from Dr. Fauci addressing the World Economic Forum, this time not in Davos, taking place virtually. He says the following. He's worried, Tom, about delays to the second COVID vaccine dose.
It's serious. It's called titer, T-I-T-E-R. It's different bacterial and virus, but the answer is, John, this is really serious. For those of you like me that have had the first dose, it's critical to get that second dose within the window. I'm getting it, John, as close as I can to that next appropriate date. I believe it's 19 days out for the Pfizer vaccine. But, John, it's right. It's just basic microbiology and vaccines. You got to get the second dose, that booster shot, when you have to.
The big challenge, managing the supply issues.
Yeah.
That challenge is not going away anytime soon. Tom, I'll step away, get to another studio coming up for Bloomberg TV. For our viewers at 9 a.m. Eastern Time on the
He's
Open.
Going to another property?
UBS Head of Equity Derivatives Research, Stuart Kaiser.
I thought his properties were gone after this
It's
event.
pay as you go. You get about 1 hour, 40 minutes of me on this show, Tom, and then I drift away. Do you think they took the show off me? Is that what you thought happened?
I have no idea. My people, have been left in the
I know you've been lobbying for my program.
Got that right. Got that right.
I got told when I got back. We'll talk about that later. I look forward to that chat.
Yeah.
I mean it. This is
With the First Word News, I'm Karina Mitchell. There are signals President Biden faces challenges in enacting his proposed $1.9 trillion virus relief package. Republicans and Democrats on a call with White House economic advisor Brian Deese asked for justification of the size of the proposal. Republican Senator Susan Collins says she'll see if the bipartisan group on the call can come up with their own plan. Meanwhile, Boris Johnson and Joe Biden struck different tones on the prospect of a trade deal between the two countries. The British Prime Minister was the first European leader to receive a phone call since the inauguration. The UK statement on the call says the two discussed the benefits of a potential free trade deal, but the US statement didn't mention it. A new deal with the US is a top priority for Johnson. In Russia, the Kremlin downplayed nationwide protests demanding the release of jailed opposition leader Alexei Navalny. Western governments protested the detention of thousands of demonstrators. Tens of thousands of protesters battled riot police in freezing temperatures. They had been warned they could face charges of mass disorder for taking part. And another potential scandal at Deutsche Bank. It is investigating complaints some bank employees sold risky investments to clients who didn't understand them and then shared the profits. According to the Financial Times, the probe centers around a former employee. The paper says it appears only Spain and Portugal-based clients were affected. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karina Mitchell. Much more to come. Stay with us. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
in the technology companies' earnings this week, that their power, I expect, will see very strong results, and we'll see that their relative power has grown, and that will naturally raise questions about, what should be done.
Mark Reed with WPP, their CEO. Right now, we're going to dive into a conversation on radio and television on the state of the American economy, and we do this with great respect for the number of moving parts going on. Just as one example, hospitalizations seem to maybe have been broken here over the last 5 or 6 days to a better statistic. Carl Riccadonna, Bloomberg Economics chief U.S. economist, joins us right now. Tom Keene and Lisa Abramowitz. And what's so important here, Carl, is the readjustment to better numbers. I can assume it's never been a more harder task for anybody in economics right now. What are the signposts you're looking at as you try to recalibrate to more optimistic numbers?
Well, good morning, Tom. The signposts we're watching are those that are trying to draw a distinction between what happened during the first wave of infections back in March, April of last year, and how things look similar and how things look different in the current environment. And we're seeing really substantial differences where we have much higher hospitalization rates, mortality rates, infection rates, but far lesser impact on the economy. And that's why, in fact, in response to the recent string of data, we have to actually mark up our forecast for fourth quarter GDP, which will be out later this week. Originally, we were around 2.5%. Now it looks like a number closer to 5%.
The part of the American economy that's doing better, is that a persistent doing better, or is it a one-off due to stimulus, this or that?
I think the parts that are doing better seem to be industries that have adapted to the world of social distancing and working remotely, et cetera, et cetera. So things like bricks and mortar retail, clearly still struggling, as we saw in retail sales over the course of the fourth quarter. But as we look at other industries, manufacturing, industrial production in general, even some services that are able to operate in the new environment, things like financial services and real estate, for example, we're seeing the incredible resilience in those industries. And so I do think this is a sustainable improvement, not just a one-time reaction to stimulus.
Carl, how much can the Fed recognize the good news that you're talking about in a press conference where they're going to try to avoid any discussion of a taper tantrum or a taper, I don't know, concern afterwards? How much do they have to ignore the good news?
Well, at the risk of being glib, the Fed can sit back and kick up its feet in 2021. They did the heavy lifting in terms of both policy maneuvering, whether it's interest rates or asset purchases, and also the heavy lifting in terms of communication in 2020. And so now is the time to sit back and reap the fruits of that hard work. And so they acknowledge some improvement in the economy, certainly upside risks due to the fact that we had fiscal stimulus 2.0, 3.0 looks like it might be percolating its way through the system, depending on negotiations with Congress. But we are seeing some elimination of downside risks. That being said, the new variants that are spreading, hiccups in the vaccine distribution supply chain, all of those continue to be downside risks as well. So I think the Fed acknowledges maybe a modest improvement relative to December, but the key theme is going to be something Chairman Jay Powell said in that webinar with the Princeton Economics Department a week or two ago, where he said it is not even time to start thinking about or talking about the exit.
Kicking up their heels, I guess Tom Keene and Caroline Hyde will do the same. When they have a Fed special, they'll kick up their heels, put them on the table, and just stare at the camera. Carl, there is a question about what could trigger perhaps a little upset to just putting your heels on the table and just sitting back and enjoying your work, about if we do get some sort of larger than expected increase in inflation, which actually does call the Fed's hand a little bit, forcing them to just address when they'll start to care about it or start thinking about things. What do you think would be the catalyst for such an increase in inflation expectations that some people are starting to predict?
The catalyst for that type of inflation would be an unemployment rate falling to about 3 or 3.5%, Lisa. And I say that because the reality is that is not happening anytime soon. We're going to see incredible stickiness in the unemployment rate as we see all of those labor force dropouts from 2020 eventually coaxed back into the labor market. The risk of a sustained pickup in inflation anytime soon, and by soon I mean the next year or two or three, is just not there. So the same critics that said balance sheet expansion in the last economic recovery was going to cause hyperinflation are going to be sorely disappointed this time again as well. Economic slack will keep a firm and heavy lid on inflation pressures in the economy, and so the Fed is going to continually look through these pressures until we actually see wage pressures in the labor market. And what we've observed over the last 50 years of data is that we have less and less response in the Phillips curve in the labor market in each economic cycle.
Carl, in your study of economic history, have you ever seen, with a massive kink in the Gini coefficient we've got in America, the great separation of our inequality, have you ever seen an ability to apply stimulus to the people that really need it?
Well, if we look at Gini coefficients, we're talking about inequality levels going back to either the 1920s or the 1920s or the 1880s and 1890s. The inequality meter goes back and forth over time. There certainly is an ability to redistribute income if needed, but the question is if there's the political willingness to do that. So taxation and stimulus policy is how you even out that inequality in the short run. In the longer run, it's things like education policy and healthcare and education, et cetera, et cetera. It can be done. The question is if the political appetite is there, and with such thin majorities for Democrats in the House and Senate, I don't think the political appetite will be there.
Carl, thank you so much. Launching to February 5th in the jobs report that we'll see, and of course, important GDP data this week. Mr. Riccadonna at Bloomberg Economics as they catch up to a better than good American economy. Lisa, you hear that, and you and I are doing the same thing. We're walking around New York City going, really?
It's everywhere.
I mean, I'm sorry, folks.
But this is global, and this is really important. And Oxfam put out this report that basically said that since the pandemic took hold, it took 9 months for the wealthiest individuals in the world to recoup all COVID losses, and it may take more than 10 years for the world's poorest residents to recoup the same. And that, to me, highlights the stark difference, a record rise in inequality due to the pandemic. Tom.
And I'm watching the statistics, and I haven't mentioned this all day, but I'm really watching in the next 4 weeks the dynamics in Africa on COVID, because I think there's a lot of really difficult data reporting there, and some of those trends have just begun to nudge a little bit more difficult. Red and green on the screen. The VIX on a stick, 1.45 points, 23.36. Some of the tensions there, of course, coming off Mr. Fauci, Dr. Fauci, speaking at the virtual Davos this year. Coming up on Bloomberg Markets, an important conversation. France's economy minister, Bruno Le Maire. Please stay with us through the day on radio and TV. Good morning.
our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
From New York City, for our audience worldwide, good morning, good morning. The countdown to the open starts right now with about 30 minutes to go. Futures positive, about 1/10%. We begin with the big issue. Republicans pushing back against President Biden's $1.9 trillion plan.
The total figure is pretty shocking, if you will. And the idea that we need a stimulus is a little hard to understand, because I'm one of those that's convinced that if you want to see this economy get going, we got to get beyond COVID, and spending and borrowing trillions of dollars from the Chinese, among others, is not necessarily the best thing we can do to get our economy to be strong long term.
The Biden administration moving full speed ahead despite those concerns. Republicans calling for a smaller package. White House Chief of Staff Ron Klain speaking on NBC's Meet the Press.
We're going to move fast, and we're going to move bipartisan. I don't think bipartisanship and speed are enemies of one another. The need is urgent. Americans, both Democrats and Republicans, are dying. Kids' schools that take care of both Democratic and Republican kids are closed. People are on unemployment. People are in food lines. That's not a party issue. So I think let's try to move on a bipartisan basis. Let's try to move quickly.
This coming as President Biden moves forward with another round of executive orders unveiling the administration's Buy American plan, looking to boost manufacturing by increasing the amount of U.S.-made goods purchased by the federal government. Joining us now to discuss from Washington, Emily Wilkins, Bloomberg government reporter. Emily, in some ways, in this particular way, the new administration sounding a little bit like the old administration. Your take?
So Biden is going to be signing a lot more executive orders today. And yes, one of these executive orders, the Buy American, it is similar to another one that Trump signed when he was president. But other ones are going to differ. Biden's going to have a focus today on immigration, on climate change, on creating a commission to look into police reform. So definitely some differences there between Biden and Trump. As you noted, he is also continuing to push that $1.9 trillion spending. And he spoke, you mentioned that there are Republicans who are opposed. It's Democrats too. Yesterday, a top White House official spoke with a bipartisan group of senators, and their message to the White House was, explain to us why we need $1.9 trillion now, when we just passed $9 billion back in December. And so that's something that the White House is going to try and answer in coming weeks. There's definitely going to be a push here for perhaps a smaller package focused on vaccines. And this is all coming as the articles of impeachment are going from the House to the Senate. The trial is going to be delayed for about 2 weeks. That's going to give Trump's defense team time to get his argument together. It's also going to give the Senate more time to confirm Biden cabinet positions. The Senate is expected to vote today on his Treasury Secretary nominee for Janet Yellen, and perhaps later in the week for Anthony Blinken for Secretary of State.
Emily, just quickly, if you can, you give me the timeline there for impeachment proceedings. Do we have a timeline for this aid package down in D.C.? Negotiations taking place through the weekend. How long have they got? How long do you think this takes?
The aid pack, I mean, when you saw the $9 billion aid package back in December, that was the result of months and months and months of negotiations. So it really is hard to say. There's some skepticism that this aid package is going to be done by the time impeachment starts. On the other hand, the impeachment trial isn't expected to last really long. We don't have a giant cast of Ukrainian characters here. This is a pro-Trump mob that stormed the Capitol when senators were inside. And so there's a chance that it could move much more quickly than the impeachment trial we saw last year.
Emily, always great to catch up. Emily Wilkins there down in D.C. And as we mentioned a little bit earlier on Bloomberg TV, the jury are also the witnesses down in Washington. A very, very strange situation down in the nation's capital. For markets on Wall Street, equities pushing higher on the S&P 500 by about 0.1%. The clear outperformance on this morning, though, is the Nasdaq going into the opening bow. The open about 25 minutes away. Stuart Kaiser of UBS saying fiscal developments in D.C. might take a backseat for investors in the coming weeks, writing, quote, consistent with expectations, 4Q earnings have shifted market attention to fundamentals from stimulus, causing friction for the cyclical value rotation trade. Stuart joins us right now for more. Stuart, build on that if you can. What are you seeing beneath the surface?
Hi, Jonathan. Good morning. I think what we're seeing is essentially, the market had rotated into these cyclical/value stocks at the end of last year and then early into this year. And then as earnings have started, I think they've been sort of reminded why they liked the leaders to begin with from last year. So what we've seen is, key trades, whether that's EM, DM, or, value growth or large cap, small cap, have all kind of reversed a little bit tactically here. And we do expect that to continue over the next couple of weeks. I think the catalyst for that for a lot of investors was Netflix. The Netflix report was extremely strong, and I think it reminded people of really the fundamental underlying strength of these large cap tech companies. You get 65% of market cap reporting in the next 2 weeks, then 75% of tech, and you also have communication services reporting. So our view is as that really strong fundamental data gets reported, this bid for value stocks is going to be muted, at least tactically.
Well, Stuart, that's where the earnings have been. That's where the earnings are. And in many ways, these are pre-COVID trends. Post-COVID, Stuart, I think the conversation I keep going back to, once we get past this sequential story, the mechanical reopening from being shut down, and we start thinking about the cycle and the fundamentals around us, are the winners before COVID the winners post-COVID?
It's a great question. I think those stocks are still going to perform well. I think the question is, do they outperform? And, what we've seen for the last month or two is tech up, just not up as much as, let's say, small cap and the Russell 2000 has been. So, I don't think you're going to see a large deterioration in the fundamentals of large cap tech stocks. I think the question is, does the earnings breadth widen out? And does it widen out enough to allow you to buy, the second tier or third tier of stocks? And I think that probably is true. And in our view, it's going to take a little while, though. You need to get into the second half. You need to get, the vaccination pace increased. You saw the comments from Dr. Fauci today. I think, kind of spooked people a little bit that the timeline might be a little bit stretched out more than it might have been. So, I'm more of a fundamentals guy, so I do think the companies with the strong fundamentals, you want to own them during COVID. You probably want to own them after COVID. The relative weighting of those in your portfolio might shift, and we've definitely seen investors gravitating towards small cap, towards value, and a lot of interest in emerging markets and global cyclicals as opposed to just being focused on U.S. stocks.
Well, let's talk about fundamentals and build on that a little bit more, Stuart. Earlier this morning, AMC came out raising another $900 million. They're taking immediate threat of bankruptcy off the table, stressing the word at the start of that sentence, the immediate threat of bankruptcy for this company. But here's a company, Stuart, that has been shut down for the best part of a year and has carried on raising capital and can remain functioning. And you have big days when these kind of stocks are absolutely flying. Stuart, how hard is it to navigate a market where in some parts, and you stress the fundamentals, but in some parts, the fundamentals, the earnings, they don't matter?
It's a great point, Jonathan. I think, the last couple of weeks, we've seen a lot of these high short interest stocks, which I think would fall into the category that you're describing, really, really rally. And certainly that's been really difficult for active managers. So, if you talk to our credit strategists, I think, they're feeling reluctantly pretty good about things. To your point, there's just a massive amount of liquidity in the system. So, I think what that does is it makes it much harder to run a short book because the companies with the weaker fundamentals are not realizing those fundamentals the way they used to. And if you're short a stock right now, you're really running, serious risk to your portfolio to be in those stocks. So, without a doubt, the amount of liquidity that's in the system is impacting things, whether that's monetary or fiscal. And it's definitely, I think it's been much more difficult if you're a short investor or if you're outside of stocks that have really poor fundamentals, because those stocks, to your point, are just not realizing the price performance that might be consistent with those fundamentals. To the upside, I don't think it's really hurt you as much. So definitely the case. I think high yield credit, leverage loans, those areas of the market are also falling into that category. And that's just here to stay, right? I mean, I don't think we're going to see a withdrawal of that liquidity anytime soon, though our economists do think in the second half of this year, you could start discussing things like Fed taper. So I think that is sort of a latent risk out there, but it's not a risk for today, to your point. Yeah. And today, you just have to respect the liquidity in the system.
Well, Stuart, that's where I wanted to finish it with you. The magnitude of the distortions, the size, they make the front pages. This has been persisting now for quite a while. And some of this, particularly in fixed income, existed long before the pandemic. Stuart, how would you define a bubble if it persists for a long, long time? Not just a couple of years, but for a decade.
I guess the bubble becomes a dome if it lasts for that long. Look, I think fundamental investors obviously have been very, very frustrated, I think, with this, but it's not going away. There's a massive amount of liquidity, and the Fed, I think, the last few weeks has signaled that they're very, very reluctant to do anything that would upset that apple cart. And I think that's where the investor debate is if we get the inflation move that we expect in the second half, and if growth recovers the way a lot of investors think, our economists have the unemployment rate down to 4% almost by the end of the year, does that give the Fed confidence enough to kind of pull back on some of that liquidity?
Stuart, great to catch up. I'm going to have to jump in and leave it there, sir. Stuart Kaiser of UBS. Good to see you. Thanks, Stu. In the market right now, about 20 minutes away from the opening bow. Futures up about 5 points. We're up a little more than 1/10%. With your movers, there are many. Here is Bloomberg's Sarah Ponczek. Hey, Sarah.
Hey, John, there are many, but I will zero in on big tech ahead of what is going to be the busiest week of the earnings season. We've also got a Fed meeting on the docket. Starting with Apple, a couple of price target raises here from the likes of Raymond James and also Wedbush. You see in the pre-market trade, Apple up close to 3% this morning, and we saw Raymond James raise their price target to $150 a share from $140. Wedbush also raised its target to a new street high view of $175. Also, Microsoft does report tomorrow. Bloomberg Intelligence expects Microsoft's cash balances to have grown to a record high. At the same time, Microsoft has now beaten earnings per share estimates for 18 straight quarters. We'll see if they can do it again. Microsoft up 1.4% this morning. ADRs of Tencent pushing higher yet again, up more than 8%. Tencent's been higher for 8 straight days amid an options frenzy. That's the longest winning streak since 2018, so 3 years now, already up 25% this year. Also, though, on the flip side, we do see Merck moving downwards this morning, down 0.8%. The company is discontinuing development of its 2 experimental COVID vaccines after early trial data showed that they failed to generate strong immune responses. So a bit of downside there for Merck. Flipping up the board, though, let's take a look at some of those reopening stocks, particularly your travel stocks. Some airlines and cruise lines, American Airlines, United, Carnival, all down more than 1% in the pre-market trade this morning. This, as we do see more travel restrictions and COVID concerns do remain, John.
Congratulations, Sarah. Honestly, you just did stocks for about 2 minutes and didn't mention GameStop.
I knew you would be proud of that. No Bitcoin, no GameStop.
Are you going to bring that to me in about 20 minutes?
It's not on the calendar right now, but maybe we'll switch it up.
Don't let me down.
Okay,
Don't let me down. Coming up, US GDP, a Fed rate decision, and the busiest week of earnings season. Clear Harbour's Aaron Kennard joining us to preview a busy calendar full of market-moving events through the week. That conversation up next from New York City this morning. Good morning. Futures positive 5. This is Bloomberg.
give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
I am David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
The Fed is going to start telegraphing their intention to taper QE sometime later in the year. We're still a couple of years away from actual moves higher in Fed funds, but I think investors are going to start to rotate towards bank loans and look to benefit from future higher rates of short-term interest rates.
BlackRock's Michael Friedrichs there discussing the outlook for the Federal Reserve ahead of this week's rate decision. Busy week ahead. With your preview is Kelly Lyons. Hey, Kaylee.
Hey, John. Yeah, very busy week ahead. A slew of economic data rolling out across the week as well, beginning with consumer confidence tomorrow. We'll get durable goods on Wednesday, followed by GDP and initial jobless claims on Thursday. More data on Friday with personal income and spending and pending home sales. But of course, John, as you mentioned, the Fed on Wednesday is the big economic event. Officials meeting this week for the first time since the Democrats took back control of Washington, raising the odds of more robust fiscal relief getting through. We will hear from the Fed on how they expect more fiscal spending to impact the economic outlook. Another thing to be watching out for is any talk of tapering, John, with break-evens back above 2% on those break-even inflation rates and 10-year yields back above 1% for the first time since March. That taper talk has started to creep back into the conversation. Now, we did have Powell saying recently, now is not the time to be talking about an exit to their massive bond buying program. The general consensus seems to be that the Fed will stay on that message this week, but the risk is if Powell doesn't come out forcefully enough on maintaining the status quo, that could cause some upset in the bond market. Now, of course, the Fed is meeting on Wednesday before we get that read on the fourth quarter performance for the U.S. economy on Thursday. That GDP print expected, according to this survey of Bloomberg economists, to come in at around 4.2% growth. Now, the Atlanta GDP Now forecast, which is what we're looking at here, is a bit higher, around 9%, but still that is a significant deceleration from the record 33.4% growth in the third quarter. A big chunk of the reason why consumer spending only expected to post growth of 2%. That is down in a big way from the 41% growth in the previous 3 months. That lack of any fiscal support until the very end of the year, and of course the resurging coronavirus cases weighing on consumer spending, which of course is about 2/3 of the U.S. economy, John.
The labour market not looking good going into year-end, starting the new year. Kelly, good to see you. Kelly Lyons there on the week ahead. Joining us now is Aaron Kennan of Clear Harbor Asset Management. Aaron, let's just start with where we are now compared to where we were at the start of the last recovery. The capitulation over interest rates, you remember about 10 years ago, everyone seemingly thought rates would go up sometime soon. Even the Fed had that in their projections. It's so different, Aaron, this time around, isn't it?
That's right, Jonathan. Thanks for having me. Our expectation is that the Fed will continue to purchase $120 billion of treasuries and mortgages every month for a long period of time. The fear of taper tantrum is entering the sort of lexicon of market participants. I personally do suspect that it's not a part of the conversation happening at the Fed, and the Fed has indicated as much.
What do you think the threshold is to remove that accommodation, to taper?
Well, first off, we have this delay, of course, in the vaccine rollout, and we also have a huge gap on the labor side of the economic equation. I can't imagine the Fed, in the midst of continuing claims where they are today and the unemployment rate where it is today, wanting to spook the market. I also think that headline inflation, while it's a concern and expectations have generally risen over the last several weeks, although last week they did seem to subside a bit, probably is a bit overdone. I think that what we are seeing, what we do anticipate seeing on the inflation side is sort of the ex-food and energy component of inflation rising, which is not the core, which is not CPI. And until the labor market really improves and until components of the real estate market really tighten, I would anticipate that and of course GDP growth accelerates, I would expect the Fed to certainly remain at bay here for a while.
Aaron, what you're doing, though, is so important. You're drawing a distinction between the forces, the economic forces around that mechanical reopening from being shut down, the price pressure we might experience in the months after that, maybe even the quarters, and then the longer-term story, the longer-term forces, secular stagnation, demographics. And I know you've been thinking about that more. Is that still the story? Have we not managed to address that? And do you expect policymakers to fail in addressing that as well?
Well, Jonathan, I personally believe it's just going to become more pronounced as we move out of a cyclical recovery, or perhaps some would argue we're entering one, and I understand that view, and to some extent I embrace it, but we still will have to, at some point, revert towards the sort of secular growth trend mean. And whether that's a year, 2 or 3 years from now, that's going to be an interesting challenge, not only for the United States, but really the world. We have an aging population. Our population growth in the United States went from 1.2% per year to something like 0.4% where we are today. But we have one other huge and negative headwind, and that is the rise of debt to GDP, both home and abroad. Now, with rates at zero, policymakers are not concerned, but that can change somewhat quickly, Jonathan.
So how do you want to allocate to that? And do you want to allocate to that story now, Aaron? Is that something you wait for?
Well, I think being mindful of it and trying to understand the anticipated correlations of major asset classes like the long bond, like the treasury market to corporate investment grade credit or to high yield, how gold is going to function in a market where we have perhaps volatility on the currency front, which areas of the equity market are going to be perhaps beneficiaries of incremental inflationary pressures in a rising Fed. I think what's interesting, for example, in that point is you have the smaller sectors of the U.S. equity market, like materials and energy, which represent, materials are what, 1.8, 1.9% of the S&P 500. Well, we could have a major move in the materials segment, not only because we're seeing lots of energy efficiency investment, lots of infrastructure investment, but because they're trading at historically low multiples, and yet it may not really impact the overall directionality of the equity market if, in fact, these mega cap stocks like Apple, like Facebook, and others are under pressure for the remainder of the year. It's not necessarily our base case, but it's something we're very mindful of, the degree to which the indices today are so much more concentrated at the top than perhaps any time since 2000.
And we've seen those big names, Microsoft, Amazon, Apple, really trade sideways since early September. That's the equity market. I'd like to finish on fixed income. I got the notes for you, Aaron, and just jumping off the screen when I read them was just sovereign fixed income still has merit in the portfolio. Why do you think that's the case?
Yeah, I'm a big believer that we have to think about, on behalf of our clients here at Clear Harbor, strategically allocating asset classes and understanding under what scenarios some asset classes will perform well while others are not. And I still believe, one of the few asset classes, 10 to 30-year part of the treasury market, even in the midst of this very low interest rate environment, negative real rates, still has merit from a risk-adjusted asset allocation perspective. If GDP underwhelms, if the economic data this year underwhelms, if earnings underwhelm, it's not necessarily our base case, but we want to make sure that we're not only allocating based on our own sort of base case, but we have to ask ourselves, what if we're wrong? And if we're wrong, we still think treasuries probably perform well if the economy underperforms and the equity markets underperform this year. And so in that sense, we think sovereign treasuries still have merit in a diversified multi-asset class portfolio. And that's not a portfolio for everyone, but it's a portfolio for people who are not trying to take the scenic route, as I like to say, from point A to point B, but are trying to sort of mitigate volatility and achieve their financial ends.
That's a good way of putting it. Aaron, great to catch up. Aaron Cannon on the latest in this market, with the long end outperforming this morning, 10s, 30s, yields lower. Coming up on this program, the analyst action you need to know. That'll be next in our morning calls, and later, Jay Jacobs around the opening bow, looking ahead to a big week of tech earnings. The conversation still ahead. From New York City this morning, good morning to you all. 7 minutes away from the opening bell, a beautiful morning in New York. Futures up about 5, call it 6 points higher on the S&P 500. Your outperformance the NASDAQ, absolutely flying. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Futures positive on the S&P 500 this morning, just about. On the NASDAQ, that's where your outperformance is. That's the story of the market. Let's get you some morning calls and look at some of the analyst recommendations on Wall Street this morning. First up, Credit Suisse upgrading Wells Fargo to outperform with a $40 price target. The analysts seeing a path to higher returns following the bank's quarterly results. Your second call from Citi upgrading Mosaic to a buy, $33 price target. The analyst expecting the company to benefit from strengthening grain markets and rising fertilizer prices. And finally, Wedbush raising its Apple price target to a street high 175. The bull, Dan Ives, expecting pent-up iPhone 12 demand to fuel blowout results this Wednesday. I admit, it's one of the first things I did when I got back. I upgraded the phone. Coming up, more on Big Tech. Jay Jacobs joining us on the other side of this break. From New York, this is Bloomberg.
It's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Everybody you talk to is talking about bubbles. Bubbles in bubbles. You can't get away from it. You pick up the Wall Street Journal, the FT, read Go on the Bloomberg, you will find an article about bubbles. We'll talk about that in just a moment. This morning, good morning, there's your opening bell. Going into that, S&P 500 futures just about positive, up 0.2%. Huge outperformance on the NASDAQ last week, again this morning, at 1 percentage point going into tech earnings. More on that with Sarah Ponczek in just a moment. Switch up the board. Federal Reserve decision on Wednesday. Yields come in 2 basis points at the long end. It's called the bull flattener. Long end leading the way. Flatter curve. Yields down 2 basis points on a 10-year to let's call it 1.07%. And in foreign exchange, we can have a little conversation about Europe a little bit later. It is not looking good on the continent for this vaccination rollout. It is not looking great at all. Euro dollar 121.50, coming down 0.2%. That's the cross-asset story at the market desk with your movers. It's Katie Lyons. Hey, Kaylee.
Hey, John. Well, I want to kick it off with tech since they will be leading the charge on the earnings front this week and, of course, are leading the gains this morning. Let's begin with Apple, which is up about 3% at the opening bell. A series of price target raises from Wedbush, Raymond James, and Evercore ISI, all lifting their targets on the stock ahead of results on Wednesday. A lot of positivity about that iPhone 12, John. Amazon won't report until next week, but it is also higher to this morning, a gain of around 1%, expected to post revenue growth of about 37% in the holiday quarter. Elsewhere in tech, also related to earnings, is AMD. Citi opening a positive catalyst watch on the stock ahead of its results tomorrow. The analysts expecting upside to its guidance. The shares are up around 2% this morning. Not related to tech, but also in the green is Spartan Acquisition Corp, the SPAC backed by Apollo Global Management, the blank check company merging with Sunlight Financial, which provides loans to homeowners for solar panels. That deal is worth about $1.3 billion. The stock is up around 41% as a result. And speaking of what's going up, John, let's talk about a couple of short squeezes, beginning with AMC, outsized mover on the morning, up around 26%. Forget a delayed James Bond movie. They just raised $917 million. Tank's bankruptcy off the table for now. And the mania continues for GameStop. Sarah didn't mention it earlier, so I have to now. Up another 52% at the open after a 51% surge on Friday, up more than 260% in the last 2 weeks. Short interest represented more than 100% of float at one point, but the bullish retail traders slowly drowning out any bears that are out there. Literally the poster child for speculative frenzy. And finally, take a look at Express, up 100% this morning after a more than 50% gain on Friday. Call option volume more than 13 times the 20-day average on Friday. Again, it is that speculative frenzy so present in this market, John.
Is that a yellow card offence? I'm just asked in the control room. Is it a yellow card offence that Kaylee mentioned? It's not. You're allowed back tomorrow. Kaylee, I don't get it.
Me either, John.
You don't either. Sarah Ponczek, Katie Lyons letting the side down. 32 minutes into the show, mentioning GameStop. Look, for me, the absence of skepticism is what makes a real bubble. Just think about that. And when I logged onto Twitter, everyone just having a dig at what's happening with GameStop. You should be worried, I understand, but I'll be even more worried when people aren't complaining about it. On the week ahead, with a massive week for big tech, I want to bring in Bloomberg's Sarah Ponczek. Hey, Sarah.
Hey, John, how lucky I am that Kaylee's taking the hits on GameStop for me. But I'll move on and bring it to this week. According to Bloomberg Intelligence, about 120 companies will report earnings in the S&P. That represents about 36% of the benchmark's market cap. Now, of course, much of that is mega cap tech. Take a look at your calendar for this week. Tomorrow on the docket, we've got Microsoft. Then Wednesday, we've got Apple, Tesla, Facebook. Those three companies alone represent over 10% of the S&P 500. Further along, you've got February 2nd, Amazon and Google together, and then February 9th. I mentioned this because Twitter, at least this far along in 2021, is one of the worst performing stocks of the year in the S&P 500. But coming off of last week, a very strong lead-in to the reporting season for big tech. The NASDAQ 100 last week up almost 4.5%, closing at a record high. That was the best week for the NASDAQ since all the way back in the start of November. And that was actually, there you see it, up 9%, the start of earnings season back then. And if you actually look at the past 5 earnings season, the first week of big tech earnings, we have seen strong strong performance for big tech, for the NASDAQ 100, if you use that as a proxy, as you can see right here. But that would really be a change from what we've seen so far, because so far we've seen a strong earnings beat rate, about 85% of companies beating their targets. But at the same time, the average stock in the 24 hours after reporting has fallen 1.3%. Now, you, John, were discussing this with Stuart Kaiser of UBS earlier on in the show, that maybe with earnings season coming to fruition, we've seen banks reporting that investors are getting a sense of why the leaders for a while now, big tech, might still be attractive. And we have actually seen growth stocks regain the lead in 2021. Take a look as a proxy at S&P 500 growth versus S&P 500 value. Now, after last week, growth beat value by the most since 2008. It was a spread of 4.7%. At this point in time now, growth has now regained the lead in 2021 ahead of value after that unbelievable rotation, we could call it, that we did see at the end of 2020, John.
Sarah, last year was unreal. I still stick by it, and I don't think it's controversial. It really isn't. Q2 last year, Sarah, the earnings growth of those companies when the world was shut down was just phenomenal. And Sarah, I think once we get beyond the next couple of quarters, we start to think about who can produce the earnings growth over the next several years. Do we go back to the same old names?
Right, that's the question here. Now, we heard from Netflix, and Netflix clearly proved that it continues to add subscribers. The question was if we saw growth pulled forwards, and we saw that we were going to get into 2021, and comps might not be as easy for these companies that really excelled in 2020, but they continue to deliver, at least in the fourth quarter of last year, as we heard from Netflix. This year, we'll get an input, an insight for the other names, but that really is the big question of 2021.
Anything on GameStop? Do you want to have a go?
I'm gonna leave it. I'm not gonna say anything.
Cool. Sarah Ponce, thank you. About 5-6 minutes into the session, equities up about 1/3 of 1%. Outperformance is clear. It's concentrated in tech, up by about 1.4%. The story we keep going back to this morning, and I think it's worthy of a bigger conversation. The vaccination rollout in Europe versus the United States is just night and day right now. We track this at Bloomberg, so let me give you the numbers. I've done it repeatedly through the morning. The way we track it is doses per 100 people. Top of the pile, Israel, 40 doses per 100 people. In the United States, it's a little less than 7, about 6.8. In the UK,